All right. Hello, everybody. Welcome back to the channel. We are here for another Palantir quarterly earnings stream. First stream I did was Q4 2021. It has been 5 years since then. Amir has been covering the company since 2021, 2022. It has been a long journey. This is always the most important earnings, but this really is, given the context of how the company has grown, one of their more important earnings that they've had in the past few years. Amir, how are you feeling for this one?
Hey man, just like Palantir weekly times up at 4:30 a.m. Let's get it. All road leads to Palantir earnings. It should be another banger, just like the one before that, and the one before that, and the one before that. I mean, they just keep surpassing all of our expectations. We'll see if today's another day as the previous ones.
Yeah, and this one is also really exciting because the first earnings that I covered, they did 433 million in revenue and had a negative 14% operating margin. I think Amir remembers these numbers back in Q4 21, early 2022. It was just like, okay, good, but it's not exceptional. The company today is expected to do 1.8 billion in revenue, which is 4x the quarterly revenue from 5 years ago, and have 50% operating margins. And most people think they're likely going to beat this 1.8 billion number. By the way, that 1.8 billion would signify 80% growth. There is no other software company. The only companies that are growing at that level are the hardware plays like the Microns, NVIDIA's, SK Hynix. There's no software companies doing that. And so it's really exciting. And I think we're going to have a lot to analyze in terms of these numbers as we get into the stream. Ladies and gentlemen, this guy's backstage. Let's see if his audio and everything works out.
Hello,
Arnie.
everybody. Do you hear me well?
Arnaldo.
Finally, I'm sorry. It has been quite a bit. I was not streaming and the mic doesn't work. The audio doesn't work. I'm doing the right thing, I swear.
Arnie is actually enjoying his life. Invested in Palantir early and decided, I'm going to enjoy my life. So he's living the dream life. But dude, we've missed you. We appreciate that you're here for some commentary. I'm going to get started with you, man. What do you think we should expect going into these earnings?
Look, every time we meet up, these last times, I wonder if we are doing something wrong because it's like the last pattern is we know the company quite well. We know that it tends to underestimate with the guidance, but we are more optimistic than the guidance. And then even our optimistic assumptions are completely smashed. Yeah. Regardless, the stock goes down. Now, will it be the same? Who knows? But I think we are at the right moment now where the narrative is ready to flip. At the same time, the fundamentals look so strong, and we will see if they're actually that strong to make any doubter doubt of themselves. Carp says, I provide the arguments, you convince yourself. I think this is the case where Palantir has already planted the seeds for the narrative shift. I think the numbers are ready to explain this narrative. So long story short, the analysts are already quite optimistic. I think we will smash even the most optimistic assumptions.
Yeah, I agree. And I want to get Amir's take on how he's thinking of the growth trajectory. The main thing for me on this earnings is that in the past month, Alex Karp's infamous CNBC appearance basically unilaterally changed the entire street's perspective on open source versus closed models, Anthropic and OpenAI versus all the open source models that are coming out. And Karp's kind of core point for the past 2 years has been the value will be in the chips, the compute that it takes to build the models, and the ontology, the enterprise application that it takes to operationalize those models, not in the models themselves. And I think with GPT decreasing their prices again last week, with Fable 5 decreasing their prices again and expanding access last week, you're seeing more and more of the model companies that have built incredibly important technology not really see the value going to them. But the market is acting as if the software companies, the companies that are expected to grow 80%, the companies that are actually inside of the hospitals and on the front lines providing this talent with the software that's necessary to make their businesses more operational, those are the companies that got sold off, Palantir being one of the biggest ones that's still down about 20% year to date. So from that perspective, I think if we get good results, which I think we're going to get great results, mixed with Karp once again explaining to the market why the value comes to the enterprise layer and why Palantir is well positioned with the best margins in SaaS to capitalize on that, that's where the street could change their narrative. And maybe this is the earnings that it takes to get the streets to think differently. Amir, the numbers themselves, streets expecting 1.8 billion. What are some of your estimates, and how do you think the street could react to those estimates?
Yeah, I'll get into it. I just want to add, like, one of the biggest changes since last quarter is actually, you know, everyone on the street and probably a lot of investors as well have had this fear that, oh my God, won't just these AI labs eventually replace Palantir with the ways things are going? And I think one of the big things now with the whole sovereign AI thing is that why would any one company have a vendor lock-in? Like, we see these models change, like who's the top of the hill, like almost weekly. You know, it happens so fast. So why would someone sign up and have a vendor lock-in for like 4 years or whatever when you could build on Palantir and, you know, be model agnostic? So I think that was really reinforced with this whole sovereign AI thing, especially when you see companies like Figma have their IP stolen, you know, competitors launched. I think a lot of people are really skeptical of, you know, doing a vendor lock-in with AI labs just for that reason. So I think that's one of the big things. And in terms of the numbers, I mean, as Arnie mentioned, our minds have been blown like these past 3 quarters. I like each one, you could say like, yeah, these are the best earnings in software history. But it just keeps getting surpassed. I don't want to be too optimistic and say that that will happen today again. You know, Street expects 1.8 billion. Palantir guided 1.8 as well. I think if we reach 1.9, I think that would be really impressive, because when you're working with like 100 plus, you know, year-over-year revenue growth, whatever you input into the model, you're like, oh, am I being too optimistic? But then you're like, well, they guided for numbers like these. So 1.9 would be fantastic. If they by some miracle do like 2 billion this quarter, then I don't know, I'll get a Palantir tattoo or something. That's we'll see.
Arnie, you talked about the deal flow in Q2. Can you remind us a little bit how strong some of those deals were over the past 90 days?
Well, let me share the screen to facilitate.
By the way, thank you all for being here in the chat. A lot of you guys have been with us for the past 5 years. We were 3 very amateur analysts in 2021. Still probably 3 very amateur analysts, but this is the one company that, you know, honestly, the last 5 years of our life we've dedicated to analyzing. And so it has really worked out for a lot of people that were here early, and hopefully the company just continues to execute today.
So as every quarter that passes the line, I like to make a summary of all the deals that have been publicly announced directly from Palantir or from the partners. It doesn't matter. We collect the partnerships, the extensions, and the relevant traces. And at first sight, I would say it seems miserable or disappointing, this list, because, for instance, compared with the last quarter, is shorter, okay? So, but is it really disappointed, or there is something more? First contract, 500 million with Kirkland that was shown at AAPCon. 300 million with the Department of Agriculture. So these contracts are not only big, but they give a stronger signal that the demand is very big and Palantir is penetrating in the most important places. Especially consider that the $500 million for Kirkland platform was extended for many years. So we are talking about a contract that shapes the industry, where you have big companies receiving a lot of funding, like Legora, Harvey, I think it is, on the
Harvey.
low. So now there are these companies that each of them are worth many, many billions. And now we see the top tier legal company that deals with private equity actually building a software like that, deeper, completely on their own on top of Palantir. This stuff is mind-blowing. So I'm learning that Palantir right now doesn't need to keep showing all the announcements just to prove, hey, we're good. Hey, stuff are going well. No, they need to show stuff exactly how they want to give the maximum signal of the narratives that are very important to them. So for instance, with this deal, they want to signal, okay, the highest ranked low company was able to build a competitor of a top AI legal company on top of us. Then we have critical partnerships like NVIDIA and Dell, and that connects so strongly with the narrative of sovereign AI, which I think we will hear a lot from Carp and all the management team. We have a signal from GNP Seguros, which is the biggest Mexican insurance, and this is one of the biggest enterprise commercial clients in the region. There is a global US marketing platform, strategic partnership with the CEO, super pumped that copies sentences from Carp in their earnings call. And we have a further confirmation that the work with Ukraine is going strongly. So overall, I think we see fewer deals announced, but the depth, the criticality of these deals is increasing. So I have no doubts about what is happening under the surface.
Amir, why do you think the stock has taken a hit for the past year?
I have no. I think a big narrative was getting drawn into the whole AI is replacing every business that is out there. But now, lately with the narrative shifting, I think a lot of people are kind of the narrative around Anthropic seems to be like really negative as of late. So maybe this is the quarter that will actually start to reverse some of that damage that has been done. I mean, we're starting to see it in some other companies. So I think it's about time for Palantir. I think like if they can cement themselves as the powerhouse that they are with just another earnings, which would be this one where they just blow it out of the park, I think it will be, too hard, too difficult for bears to, underappreciate what Palantir is doing. But to be honest, I don't know about you guys, but it kind of feels nice to have been given some opportunity to purchase Palantir again. I mean, it didn't feel that good, when you've been in the stock since the single digits, seeing it like 200 plus, you're like, well, I mean, company is great, but like it kind of hurts your soul to be buying it. Now that it's down, almost 50% since those highs, feels a lot better. So I've been doing a lot of purchasing. I can't really complain about that, especially when we hear one of the biggest announcements since the last earnings. I mean, already in Q1, Carp said we're going to grow revenues 100% this year and then 100% in the US next year as well. And then he went on to CNBC and he said something crazy. He said, we're doing $15 to $17 billion in free cash flow in 2 years. And when you actually start to look at, okay, what does that look like in terms of revenue? And then you have like Palantir will be doing some crazy revenue growth over those 2 years. I think I calculated it like on the low end, that would mean something like 28 billion in 2028. So somewhere like 8.2 billion in 26, then 15 and a half, and then 28. Like there's some crazy growth if we go off of that Carp statement. And for those that have been following Palantir for as long as we have, we know that when Carp sets a target like that, like in plain English, I mean, you better believe that it's very likely to happen, because we saw it with the 4.5 billion in 2025. Despite, during that period, they hit something like 13% revenue growth, and they still hit the 4.5 billion as he promised. I mean, if he's driving the company to do that, then we have some crazy growth ahead of us. That's all I'm saying.
If there is one thing that you learn from following Palantir for quite a bit is Carp doesn't lie. And if Carp says something, you should better pay attention to, both in terms of what relates strictly to Palantir and what it relates to what is going to happen in the industry. It's already 2 years or so that Palantir, especially Carp, was showing, guys, these LLMs are cool, are great, but at the end of the day, they're like commodities. It took 2 years before people now start talking about, and all of a sudden is, damn, these AI models are scraping all, like they pretend to unlock the value, but in reality, they are absorbing all the value. And on top of what Carp said about financial forecast, this was one of those very rare moments where Carp also mentioned something about the stock. In an interview, he just said, we're obviously undervalued here.
Yeah.
Like, whoa, he said that.
Yeah.
Well, Karp said it kind of in a passing way. We're guiding for 100%. He didn't literally say we're guiding, right? But he thinks he can grow the company 100% next year. Maybe they make it more formal. And if they give that formal guidance for 2027, then that would be massive for the street. If Karp says it again 2 quarters in a row, then he's probably very serious about doubling the company next year. Maybe we hit 100% growth this quarter, who knows? But if we hit 80% and we're guiding, we're going to do 7.5 billion this year. We're guiding for 15 billion next year, even if it's not an official guide. I mean, once again, you look at CrowdStrike, you look at Snowflake, companies that are not even GAAP profitable. Look at the multiple that the street's putting on their growth, realizing their growth or their margins aren't anywhere as near as good as Palantir. And you start to really think this is one of the more exciting discounted names in the market.
What do you think about this narrative strength? Because when Karp did that CNBC interview that became viral, the All In podcast mentioned a lot about it. It even reached the Italian media. Is it possible that now confirming that narrative with number could have an even higher amplification?
Yeah, that's my thesis on this earnings. If they have the numbers and Karp is able to, once again, Karp and Sham both explain the narrative around why the models aren't relevant when it comes to the age of AI, where are the values going to, the hospitals, the governments, the logistics companies, the actual case studies that they spend so much time talking about at the AAP cons, and that bleeds into the results in a really significant way. And once again, the street hears, okay, Karp told us on CNBC 3 weeks ago and got the entire world to change their perspective on open source versus frontier models. Now they're showing the numbers. Anthropic and OpenAI aren't really showing the numbers because they're not public. No one knows actually what's going on in their business. So I think this quarter, I think the stock could have a 10 to 15% move if everything lines up correctly, which is we needed the first part to go well. Oil came down. We have a really green day. We didn't talk too much about the market today because this is about Palantir earnings, but tomorrow we'll discuss more about it. It's one of the greenest days we've had all year. So you got a good backdrop macro-wise. I think the numbers will be really good. That should help. And then the narrative that the value is going to the companies that make sense of the models. You put all three of those together, stock's been stuck for a few months now. It could result in something positive, but if it doesn't, then it's going to be the same old game we've been playing for a while. As long-term investors, I think we just want to see the company compound, but obviously if they compound aggressively, maybe the stock reacts.
Something I've noticed is that many companies are now trying to surf the wave of return on investment due to AI, especially ServiceNow. But I consider ServiceNow quite a poser because they talk so much, like the earnings call was so long, a lot of we are so strong, blah, blah, blah. But at the end of the day, they keep growing around 25%. It's true that as of today, it's quite bigger than Palantir. But they were underscoring a lot of these sentences like, that's why enterprises are choosing ServiceNow to convert AI ambition into measurable return on investment. And yes, clients are expanding, but it looks like this AI part is something just on top. While with Palantir, we see that companies are really converging to adapt. And there was a tweet related to the new bootcamps on sovereign AI, mentioning that it was something organized in very little time, yet 150 plus CEOs and representative of companies joined it. Like, you have been there, and how was the feeling? Like, from external, it seems like companies are literally opening the eyes of, oh, we are getting screwed. Now we need to make it right. It's like the experimentation phase with AI is done. Now we need to make it right.
Yeah, they got the idea 10 days ago. It took them 10 days to organize the event, which usually events and boot camps and all this stuff takes a long period of time. It took them 10 days, shout out to Sasha, and they had a wait list that was oversubscribed with 100 customers or potential customers and companies that were, it was just incredible. And then the energy as I was walking around the boot camp was people that genuinely are legit sick and tired of OpenAI and Anthropic. Doesn't mean they're not going to use their models, but it just wasn't, everything Karp is saying about how these corporations are coming to him saying, fix this shit. It's real. Like, they actually want to fix this shit. They token maxed enough and wasted enough money to not get any meaningful ROI. And so if that narrative converges with the numbers, again, I think that's what the street's really been looking for. And if that happens, I think maybe we see a bigger reaction.
We should have done a bingo for these earnings, like token maxing. I was I like all the terms that Carp will throw out. But actually, I've been thinking, on some things, where the stock is currently trading. It's about 62 times price to sales, and at face value, some would say, well, it seems expensive, but like really, when the company is growing the way it is, 85% last quarter, probably 88 to 90% this quarter, is that really expensive? Like, I think that multiple is like way too low for the growth that we're seeing and the growth that they are projecting that they will have, over the coming year and next year as well. I think like Palantir, like for the first time in a long time, you can say like, no, this stock is actually cheap. Like you can't even make the argument that it's overvalued or even expensive anymore. Like it's just got into such a point that it's crazy. The only fear I have going into the earnings is some unresolved question marks from last quarter and the quarter before that, and that is when Carp says that we can't deal with all the volume that we have inbound, and he said that last quarter. You mentioned it now with the oversubscribed event with Nvidia. Like, how will Palantir deal with this? Because we know that they are not hiring more people. He's being like clear, like we're not gonna bloat our organization, and we don't know how capable AI FDEs are yet, to deploy Palantir on a massive scale. We know that the demand is huge. But I would really like to hear some, commentary from management on how they will start to deal with all this volume, because everyone is moving towards Palantir. Like as you mentioned, people are starting to show fatigue from token maxing. They've tried this whole AI thing for 2 years. They haven't got very, very far. So everyone really starts to want to unlock all of that value, and that's what Carp's been saying, for over a year. Like, to unlock value, you need to build on Palantir. So it will be interesting to see, like, okay, what are they doing about that? That's what like the only question mark I have going into all of this. Like, I know the numbers will be great, but I want to know, like, how could they be even more massively great than I could even imagine? And to solve that question, we have to know, like, okay, what will you do about all of the volume that you say you can't handle currently?
I think the answer still relies into the ecosystem partner. There was a massive partnership with Google, hinting that they are able to solve this issue by putting Palantir on the Google Marketplace. So the management is aware of the limit. It seems they really want to work on top of it. Something that I would like to mention that I think really relates to the work that Amir is very good at doing in terms of the numbers is exactly what you are saying. People are so used to narratives with Palantir that they talk about stuff without even looking at that. It happened a couple of weeks ago that someone in the investment field asked me, but is Palantir profitable now? It's like, well, and then the same thing is, oh no, but Palantir is expensive. Have you actually looked at the numbers? Because if you actually look at the numbers, we are talking about around a 50x free cash flow on something that grows 80, potentially 90 today in terms of revenues, while expanding the margins, which means the free cash flow is growing even faster than the revenue, which means the price to free cash flow related to the growth is actually below 1, very below 1. And we can see, for instance, from these charts related to the EV sales and also related to the EV EBITDA, how much the multiples have compressed, because the revenues have skyrocketed, but the EBITDA even more. What I found fascinating is that now Palantir trades at half the multiples of CrowdStrike, which is considered a top B2B SaaS in cybersecurity. But the actual truth is that CrowdStrike grows half of Palantir, and it has half the margins. So it's like there is something potentially wrong here. And something that I found very interesting that I think also...
Arnie, let me just close out the day and then you can keep going. Folks, Palantir Q2 earnings, 4 p.m. The stock market is now closed.
I was missing this.
And now we wait. Arnie, go ahead. Continue.
So how far do you think we are compared with the analyst expectations in terms of price? Because if you look at this chart, it's quite staggering. So the stock has dropped, but the analyst expectations, like the fair prices of the analysts, have been stuck. There were essentially no changes in not a year, but from October, nothing really changed, while the actual business changed a lot. Yeah. And if we actually dig deeper into what these estimates imply, we realize that these numbers are not that strong. They imply something like 70% growth in 2026. But after that, the market analysts expect growth to drop already 45%, 42%. It's like, wait a second. What if actually these analysts are wrong?
And what if it's 85%? What if it's 100%? What if it's 90% for the next 2 years? Yeah.
But imagine if even considering these estimates from the analyst that are relatively low, actually the price is appealing. Doesn't it make the price actually very appealing?
No, 100%.
I think like the initial, as you mentioned back in October, I think that's an artifact of, Wall Street gotten so, roasted on being wrong on the stock. We even saw, head analysts at, some sell-side firms being replaced because they got Palantir stories so wrong. So I think that 180 was like an artifact that, oh my God, we just need to put a higher number on Palantir. And then it stayed the same while they, start to try to understand, okay, well, why should it be 180? So I think they still haven't really caught up to what Palantir is. And you can see it in their forecasting. As you mentioned, like the revenue just seems way off, and it has looked way off for the longest time. So typically, when a stock trades down like 50%, what follows quickly after that are these sell-side ratings. Like people will like lower their price targets so it's more in line with the stock price. That's the way things work. Like even if nothing changes with the business, they just adjust their price targets like to be more in line with where the stock is trading. That hasn't happened with Palantir. Like the average price target has stayed the same. So I think that initial bump was like, oh my God, we were so wrong. Let's just like put it 180, 200 where the stock is currently trading. And then even as the stock dropped, like they still haven't understood the narrative, so they just kept it there. That's my read on it.
So we don't have the numbers yet. We're still waiting for some of the numbers. We should be getting it any second. In terms of the broader market, again, we should be getting it in like 2 minutes. Tesla, great day. That was up 4%. Nebius up 11%. Robinhood up 4%. SPY had one of its best days all year, 1.42%. So once we get the numbers, we'll be able to analyze a lot more. But right now, we don't have it yet. SaaS, hyperscalers, and software names all together ended up going green on the day. Something we haven't seen really in the past 7 months. CoreWeave, massive day, up 20%. I mean, the market obviously shifted a lot of their negative sentiment last week from the Leopold blow up into the names that ended up getting liquidated. And Citadel, ironically, came out in the middle of the day and said, yeah, we think the bull market's intact, after scaring everybody that a rate hike was coming last week. So you've got all the forces, and then you got Trump saying oil, Trump saying he wants to end the war. He had a press conference today, oil is coming down. So a decent macro backdrop. Not all the semis went up today. Not all the software names went up today. Not all the hyperscalers, but a lot of them got a dispersed sort of level of green coming across the entire market, which was something we haven't seen in a long time. And now we just have to see if that reflects in the rest of the earnings numbers that we have for today and for next week. SoFi closed at 18, Ondas 11%. Again, a lot of these names have just been dead for the past month now, and it seems like they're getting some more love. All right, in 1 minute, we should be getting these results, folks. Again, the street wants 1.8 billion of revenue and about 35 cents of EPS. I think the implied move is about 10% right here, so about $12 up or down. And we're going to see how the market thinks of these numbers once they come out. There will be a letter that comes out as well. We'll read the entire letter when it comes out. We should get that in a bit as well.
Guys, very fast, since alpha comes from understanding something that the market hasn't got, what do you think is true that the market hasn't understood yet?
I think it's that Palantir is the operational layer of the LLMs. I think the market is still discounting that dramatically. And hopefully these results continue to prove that that is the case. 3%, 129, touched 130. Looking for the numbers. Okay, EPS is a beat, 41 cents versus 35. That is a beat on EPS. Revenue, 1.94 versus 1.8. That is a 94% growth rate on Palantir. Fastest growth rate in 5 years. Fiscal year adjusted operating profit, the street had 4.5. They came in at $4.9 billion, which is a lot more than what the street expected. 400 million more than what the street expected. EPS 41 cents versus 35 cents. Adjusted EBITDA, the street thought they would do 1.09 billion. They did 1.2 billion. Revenue is up 93% year over year. EPS is up 156% year over year. Revenue is up 18% quarter over quarter. EPS is up 24% Q over Q. I mean, this is a pretty fantastic quarter. Just off those headline results, we still have to get deeper into more of the numbers, but Arnie and Amir, quick reaction. 94% stock right there is up 8% after hours.
Yeah, destroyed my expectations once again. You know, I said like I'd be happy if they do 1.9. They did way above that, beat the street expectations yet again. So yeah, fantastic
Hold
numbers.
on, Amir, they just raised the guide. So the street had them at 7.65. They just raised the guide to 8.16. They raised it by about $450 million. That's $500 million they raised the fiscal year guide for 2026 on.
And that is in line with the Carp's, you know, free cash flow statement he made on CNBC. So
correct.
I mean, they are cooking now. They are cooking. Where do you have these results? I wanna.
So let's see if I can pull it up. It's not on Twitter yet. I was getting it through Cactus Jack. A lot of people that follow me know that's what I use for the information. Link it right there if you want to sign up. Free for your WhatsApp. You can get all the information, but the company hasn't put out the actual numbers yet. 93% growth. Can someone calculate the growth rate on the guide? If they're going to do 8.1 billion, which they're probably going to do closer to 8.5 by the end of the year, that 70% revenue growth, I think, just went up to like 75 or 80% revenue growth. Yes, they raised guidance by about $500 million. They were supposed to do 7.6. They're doing 8.16 right now, about $500 million. Okay, here's the more
81%.
81%. Wow. So that's not 81% for the quarter. That's 81% for the year, which no other company besides the AI infra plays are doing that. Commercial revenue up 134% year over year, 3.42 billion. Adjusted free cash flow, 4.7 billion is the guide for free cash flow for fiscal
That's
year.
the full year 2025 revenue.
That's 2025's revenue is their guide for free cash flow. Carp says demand for sovereign AI has been unleashed, highlighting 149% U.S. commercial revenue growth and stating Palantir is uniquely positioned to convert AI capabilities into measurable economic value for customers. The rule of 40 is now 155%. U.S. commercial remaining deal value is up 124% year over year to 6.23 billion. TCV is up 50% year over year, 3.37 billion. They also closed a record U.S. commercial TCV of 2.1 billion, up 153% year over year. I mean, these are pretty staggering results. Let me pull up a little bit more coverage right here, and then we'll get deeper into the numbers.
Are out. Let's get to Seema Modi with those numbers. Seema. Melissa, Palantir's second quarter earnings coming in well above Wall Street consensus, 41 cents adjusted for the second quarter versus the 35-cent estimate. Revenue topping expectations, 1.94 billion, driven in part by its U.S. commercial business, which grew nearly 150% year over year. So that's a higher growth rate than the prior quarter. The defense tech company also raising its full year guidance really across the board. CEO Alex Karp doubling down on his criticism of Anthropic and OpenAI. And in our exclusive interview with the CEO, who said, "We have people trying to drug addict us to a future they believe they control." He adds that he spent a lot of time with Dario Amodei, that's the CEO of Anthropic, and they want to tell you we have to march into a future where we own nothing, where our businesses aren't profitable, where none of us have jobs, where our adversaries win. He says Palantir and our allies are guiding into a future where you have growth and jobs. Separately, Melissa, in a letter to shareholders, Karp says a global movement is emerging and that organizations are awakening to the risks of handing the creators the language models, they're keys to the institutions. Bottom line, he's saying this pivot to open source is happening under this whole debate around AI sovereignty. The company is benefiting with that partnership, Melissa, with NVIDIA, with that commercial business revenue increasing, again, nearly 150% year over year. You'll have more of my exclusive interview with Alex Karp coming up at 5 p.m. Eastern.
Yeah, and what a pop in the stock after hours in the back of these results. Seema, thank you.
These numbers are fucking crazy, guys. These numbers. It's a little crazy.
Oh, you remember how Arnie said that? Well, we didn't get that many announcements, during the quarter. They still closed 3.4 billion in contract value, which is, a record high, of course, insane. But the even more insane number is the U.S. commercial remaining deal value, 6.3 billion in remaining deal value. It is insane. A lot of booked revenue for the future, assuming all the options play out as well.
Okay,
So
guys,
Farzad,
the presentation is up.
Farzad, thanks for the super chat. He says, being a Palantir investor is the best. Why did I do this earlier? Thanks, Submit for the investment buy. Should I sell my Tesla? I don't know if you should sell your Tesla or not, but the one thing that Palantir is doing that Tesla hasn't really been able to tap into for the past couple of years is grow. Right? This market is really looking for serious growth. Every company is held to a higher standard in the age of AI for growth, and they're doing it. And so the stock has been kind of stuck all year, even with massive growth. At some point, you can't hold down something that's just said they're going to grow 93%. If they're going to grow 93%, I think that extra 7% is coming, folks. I think we're going to see triple-digit growth on them this year. And if that happens, once again, those EPS estimates continue to go up, and the multiple compresses if the stock stays flat. Arnie, I'm pulling up your screen right now. Or did you send it to me? Okay, you sent it to me. I can pull it up in my end. Okay, cool. We got the letter in a second that I will read. Stocks up 8% after hours. Rule of 40, again, 155%. The only companies ahead of them, folks, are Micron, SK Hynix, CXMT, and Samsung. Literally the only companies on planet Earth that have a better rule of 40 than Palantir, which looks at your revenue growth and your operating cash flow, are the companies that are in the greatest supply-demand imbalance we've seen in the history of humanity when it comes from memory. Mm-hmm. Even NVIDIA is slower than Palantir. So you talk about it.
The only one looking at those lines as sort of targets that the company has. Have you noticed how in the previous quarters they put a line underscoring, okay, this is the rule of 80, bam, smashed. This is the rule of 120, bam, smashed. 160, it's almost there now.
Almost there. I mean, this is incredible. Again, these are numbers that cannot be ignored.
157 net dollar retention. So increased yet again in another, sequential quarter. They just keep moving up.
What was it last quarter? Do you remember?
Yeah, 150. So
wow,
already insanely high, and then just keeps going.
Wow. Financials, again, we looked at these numbers, but top line numbers, pretty freaking unbelievable. GAAP earnings, 41 cents. They did $1 billion of net income, guys. They did 1.94 billion of revenue. 1.06 billion of that revenue came to the bottom line. I mean, this is just not something you see that easily in any company, not even just software companies. Operating margins, 47%. Rule of 40, again, 155. U.S. revenue growth, 115%. I think there will be some questions about international growth, as there's been a lot more media coverage that's not been the friendliest towards Palantir across the seas. And I think Karp will just be like, look, they can say whatever they want. Look at how we're growing in the U.S. This is where all the money is. Eventually, we will grow more internationally, but you can't deny that where AI is starting, which is the U.S., is where they're getting all the growth. And that's leading to more opportunities for the business. Operating income was 62%, 1.2 billion of adjusted operating income. Their margins are 62%. Commercial customer count up 35%. Overall customer count up 24%. So you do have a sequential decline from 6% to 4%. But the fact that they're beating earnings estimates by 14% means that the value they're getting from those customers, even if they're not literally getting a higher number of customers, is increasing. And that is a nuance that the street has not realized for the past 5 years on Palantir. Snowflake, Salesforce, they have hundreds of thousands of customers. I mean, that doesn't matter if Palantir is going to do the same, if not more revenue at a better margin, like a magnitude of a better size of margin on 1/10 of the customers. It means the customers they're serving are actually getting value and willing to pay. And that's the standard that Palantir has held themselves to for so many years. And, now we're seeing it work out.
Yeah, that one's kind of like a double-edged sword, right? On one hand, you're having this amazing growth with just these few customers. I mean, 1,000 customers is nothing, Salesforce, 200,000. So they're able to put up these results with just so few customers. So imagine what it will look like when that customer count actually accelerates. And when you see the net dollar retention, you realize, oh my God, like each customer they add just keeps scaling massively. So I mean, that really gives some confidence in the growth ahead for this company. Like if they can scale current customers this much and grow this much with only 1K customers, like imagine once that like starts accelerating as well in line with the rest of the business.
Which is why the analyst estimates for future growth being so discounted, like 40%, 30%. I mean, dude, if they actually double customer count, which is not going to be hard to do, the more customers realize OpenAI and Anthropic aren't really giving them any value, and they have their margins and they're able to charge the penny that they charge because of the value they're providing, there is a long trajectory, a runway of growth. One of the biggest issues with the semiconductor trade is that, are these companies cyclical? Can they sustain the type of growth they're having when the CapEx slows down? CapEx or no CapEx, Palantir is going to win. And I think that's something that should be given a premium to as well, that we might see the street wrap their minds around.
Something that pops to my mind is if you compare the deals slide between these 2 quarters, the number of deals is quite similar. 220 this quarter, 206 last quarter. But the number of deals that are at least 10 million is a 73 against 47. So not only there are more deals, but already the deals are getting fatter.
9.2 billion in cash. They have plenty of cash for whatever they're going to need to do. That's a war chest of cash that will probably be valuable for anything in the future if they need the cash for it. 4.7 billion of free cash flow, again, raising the guide by about 500 million. Commercial revenue growing 134%. Adjusted income 4.897 billion. I mean, just again, unbelievable numbers. Karp's going to be on CNBC very soon with an exclusive interview. And so we will go to him. For those asking about share buybacks or dividends, first of all, Palantir doesn't pay a dividend. They're not at that stage of a company where I would want a dividend as a shareholder because they're growing 93%. Number 2 is Trump forced all defense contractors to stop their buybacks last year or early this year. So Palantir filed in their 8K like 3 months ago that they're not doing their buybacks anymore. So they bought back like $200 million of stock, but they're not buying back anymore. Okay, the letter. Let's get through it. This is one of the coolest parts about being a Palantir investor. There's a philosophy behind this business, and Karp spent some time to explain that philosophy. So let's get into it. August 3rd, 2026. A global movement is emerging. The revolution for independence and AI sovereignty is now well underway. Every organization in the world is awakening to the risks of handing the creators of the language models the keys to their institutions, of letting those models loose within their homes. The demand from our partners is clear. It is for control over data, the prompts that the models ingest, and more fundamentally, the organizational and business intelligence, their alpha, that the language labs are not ready and willing, but structurally designed to capture from their customers. The models have grown and thrived by essentially ingesting the entire written work product of our civilization. And those models, as well as their creators, now have their sights set on global industry. We have been the beneficiaries of the revolt that is underway against submission to this way of working. Our customers have declined to become vassal states of the language labs, and the market is now shifting dramatically underfoot. Our business is compounding at a rate and a scale that we have never before witnessed. We generated 1.9 billion in revenue for the second quarter of the year, another record in our company's 2 decades of operations, reflecting a 93% growth rate over the same period the year before. Our entire business nearly doubled in the span of 12 months, and our recordly revenue has been accompanied by yet another record in quarterly profits. We generated 1.1 billion in profit in the second quarter of the year, an astonishing level of proceeds that for many on the outside and even to some internally would have been unthinkable only a few years ago. Put simply, we have generated more profit in a single quarter than we did in total revenue in the same year before. And the core of our business in the United States continues to expand at an unrelenting and breakneck pace. We generated a record 1.6 billion in revenue for the second quarter in the United States, representing a 115% increase over the same period last year. We generated a record 764 million in the US commercial revenue this quarter, a 149% year-over-year increase. Such an achievement would be cause for astonishment in any business. For one of our size, scale, and consequence, it is simply staggering. On a quarter-by-quarter basis, our U.S. commercial business grew 28%. Such growth, indeed such acceleration, gives the impression that what others might require a year or even longer to achieve, we can do in 90 days. And it must be noted that we have achieved these results with a minuscule and shrinking sales headcount, another way in which we have discarded our conventional wisdom in favor of our own unique path. While our other U.S. commercial business is on fire, we believe it is nonetheless just nascent. So once again, they're putting up these numbers with a very small sales force, which speaks to the value that the customers are getting, which is why they're paying for the company. The model of our business is straightforward. We are paid and have always aspired to be paid as a derivative of value creation. Our results represent a subset of the economic value that our software has created for our customers. We do not get paid for clicks or tokens or chats. The gamification of the most significant development in modern economic history seems to us misplaced. The usage of a platform may hint at its value, but is by no means dispositive. And many are now finding out that the consumption and usage alone often have little or nothing to do with the production for results. There are Marxist overtones and undertones to our business. Others, including many of those building large language models, intend knowingly or otherwise to capture the means of production for their purported partners. The limitations and faults of the token industrial complex, which has threatened to overtake and dominate the world economy, have increasingly been exposed. Stocks up 12% after hours. We have always declined and will continue to decline, entering into a parasitic relationship with our partners. It is true that our approach has diverged sharply from the market in this regard, and yet we are one of the few companies in the technology industry that is fully aligned with its customers. Sincerely, Alex Karp, co-founder and CEO of Palantir. I mean, yeah, the token industrial complex, we reject that. We're actually bringing value.
And I think, doubling down on the whole, we create value for you first and then you pay us a lot of money. Like I remember he challenged a lot of firms. I think it was like an AIP con one, like the previous one, where he said like, yeah, why do all these software companies want to be paid first and then like deliver the value or pretend to? He's always taken the stance that, yeah, we are down from value creation. First we give you value and then you pay us. And I think that's like giving a lot of confidence into this whole token maxing narrative that's going on, that like, no, we're actually the ones that will be providing the value to the market here.
Yeah, I mean, again, Arnie, your thoughts?
No, I also liked the token industrial complex word and the other sentence, the minuscule and shrinking headcount. And these numbers with this sentence is quite weird to match. Like the business almost doubling, same headcount, even shrinking. That's crazy.
Arnie is about to go on another vacation.
So guys, before looking at it, how much do you think share count grew year over year? Outstanding shares for this quarter?
2%. I'll say 2%.
What about you, Arnie? What do you say?
30%.
0.2% dilution year over year.
No
0.2%. Guys,
wait. Yes, because the stock has dropped. So some diluted shares are not included in the number.
Yeah, but theoretically, they would issue more shares if it drops, right? Well, no, technically that's the opposite.
No.
Yeah. Oh, yeah, you're right. No, that's a good point, Arnie. But that is, however, that is still a substantial decline from what we've usually seen, which is about 2.5%, right?
No, the thing is, there are some options that I think are still around, mostly from the management, that can be counted in the diluted number of shares only if the stock exceeds the strike. I think, and since the stock has dropped, that's why there are no new shares counted in that side.
That's a fair point.
Because maybe there were some options that were included in the numbers when the stock was up and that are not included anymore now. That's my guess.
So with the past three quarters, Q4 1.8%, last quarter 0.7%, this quarter 0.2%. So like in Q4, wasn't the stock like still pretty elevated, and they still like cut dilution like massively? So I don't know. I just think that the whole Palantir is diluting their shareholder base to oblivion while Karp buys another mansion or some new ranch. Like I think that narrative is pretty dead right about now.
Palantir flies. Sorry, Alex Karp flies with a plane.
Yeah, the very like, oh my God, Karp, look at his jet expenses. I'm like, yeah, look at the contract value each quarter, bro. Like, what are you talking about?
Well, the other, in the context of Burry, if you've read his report is like Palantir is not an AI company because they don't make an LLM. And it was so funny because it's like, that's the point. That's why they should be valuable, because they don't spend money on CapEx for an LLM that China can make by distilling and using 1/10 of the CapEx, right? So it's one of those things where it's like, no, the value should be going to a company actually helping customers make sense of AI. OpenAI and Anthropic started to hire all these forward deployed engineers. It's like, if you don't have a culture of actually forward deploying software, you're not, because your whole business is token consumption, it's going to be a fundamental cultural misalignment, which is what Karp talks about at the beginning of his letter. And I think the street's going to recognize that eventually. The numbers are there for the street to recognize it. Now it's just this like boogeyman of Anthropic's going to kill all these companies. That narrative has to die out. And I think more and more with the open source models, it's starting to die out. And as long as that continues to shift, then I think the value comes right back to Palantir and the software layer in general.
Do we realize that now gradually we are approaching the growth rates that made these big models huge?
Yeah. I mean, those growth rates are now.
And the thing is, all the revenues that Palantir gets are recurring, while what I'm seeing from these AI frontier models is that now the numbers are huge, but they're huge due to a combination of the prices being very high, even stupidly high compared with open source alternatives, multiplied by a token maxing philosophy that made the volumes that generate these revenues more inflated. So it's like the numbers exploded, yes, but all two dynamics are structurally fragile.
No, I agree. And again, the sustainability of AI's revenues are really important. Like the cloud companies' sustainable revenue. Some of these random bottleneck companies that help build the GPU, how sustainable is it? What if NVIDIA innovates something where they don't need your vendors anymore? The models, how sustainable is it in a world in which theoretically a lot of that revenue might be fake and not real? And you've already looked at the growth rates starting to plateau. They're still pretty big for Anthropic and OpenAI, but they're not at the levels they were at the hockey sticks last year. And now they have more competition as the Chinese models come online. So once again, it seems like companies that can sustainably generate the type of growth that's needed are what we're seeing right here with Palantir.
All right, fellas, I think we have some time before the call, so let's just go through the charts that we do have. Like, I've been hard at work here, so I've been so quiet. I think a lot of people like, to visualize things. So 63%, and the trajectory is pretty clear here in the adjusted free cash flow. But looking at operating and income margins, like, I didn't update this for the quarter, but you can see like steadily approaching that 60% mark that is up here for, both net income and for the operating margins. And then if we look at our little fella revenue, 93% year-over-year growth, approaching that 2 billion. And, AIP launched, here, and then you can just see this, exponential growth. US commercial, 150% year-over-year. US government, which is, Arnie asked me like, okay, us on during this live stream, like, what's the one thing that the street is not, paying attention to? I think government. Look at year-over-year on government, like 80%. Like, it's not only US commercial. Government is growing a lot, and it's not only US government. Like, look at non-US government is like in the 40+ range. Now, it's a bit more lumpy than, just up in a straight line accelerating every quarter, but like we're still growing like 40 to 50% in non-US government. And the one thing that we've been all bearish about, that Karp always says, like, Europe doesn't want to play ball, like 2 quarters in a row of over like 25% growth in international, US non-US commercial, so international commercial revenue. And that used to be like 3%, -5%. As you can see, since they went public, Q1 2022, it's been pretty flat. That's why they always say, like, yeah, like Europe does not want to play ball. Now we have 2 quarters in a row of over 25%, growth in international commercial. So I think that is pretty massive as well. But I want to look at this as well, as Arnie mentioned when we look at it, the deal breakdown. Like in terms of absolute terms, 220 is not, such a big increase over, 206, 204 that we've had, like the recent tops. But look at this golden one here, 73. So black is 1 to 5 million, blue is 5 to 10, and then this golden one is over 10 million. It could be 100 million, 500 million, 11 million. Oh, basically over 10. 73. Like they are doing some massive deals now. Remaining deal value, US commercial grew 123%, over 6 billion in remaining deal value in US commercial. Remaining performance obligations almost up to that 5 billion. And this is basically all commercial. Most of government contracts, they don't qualify for RPO, due to how it's set up. So you can see this as a proxy for commercial. Like, look at what has happened these past quarters. Like the jump that you see is just insane, and this is just, a commercial proxy. So just some initial charts, like looking insane here. As we go through the rest of the numbers as well. But yeah, I mean, dilution is down, growth is up, like everything, margins are expanding. Everything you want to see in a company. Like, what is bad about this quarter? I can't find a single like bearish thing. Like SPC went up a bit, but that's just sales and marketing. Like, guess they've been doing a lot of events. I don't know. Like, Amit is expensive to fly out, but besides that, I don't know. Like,
Dude, well, first of all, I've paid for every single flight and hotel that I've ever gone to at a Palantir event. So they're definitely not spending the money on me. But it's like, I mean, the operating margins, once again, at 47%. It is unconceivable that they're doing this with the amount of money that it takes to actually manage an enterprise in this age of AI. But part of it is because of the low headcount. And it's very hard to get a job at Palantir, but it's because if you get a job, you're going to have to produce. Cheryl, thank you for the super chat. Amit, you and the guys helped me grow conviction and ride this down to $6 and back. Thanks to you, Arnie and Amir. Great to see you together again. Cheryl, thank you so much. There are many people that have been part of this journey for the past 4 years. And, at $6, it was, you could see the potential of what Palantir could become, but the numbers were so awful that it was hard to actually think they would come to fruition. And this is Palantir is like one of the top 10 companies that's talked about every single day, and it has been for the past 2 years. And now they've got the growth to continue to accelerate why they're talked about so much. So it's been a hell of a journey, and we're really seeing the market start to recognize that as well. Which I think also brings up some context, right? Obviously, the stock is down from the highs at 200, but in a bull market, everything gets up to a certain level, and then it needs to materialize. 140 from $6 over 3 years is a pretty exceptional return that's beating the market. And the good thing about that is many individual regular people like all of us have the opportunity to participate. And again, the multiple has been high on this company for a while because the secret got out by 2024 and people realized, okay, Palantir is the real thing. And the multiple has always been aggressive. But every quarter, they kept putting up the earnings that would get you to A, justify the multiple, and then B, if the stock tanked, the multiple, or the stock stayed the same, the multiple would go down so dramatically that the dip would get bought up. And I think over time, we'll see it back to all-time highs as the growth continues to compound.
Do you think the stock deserves to get back at the 200? Yeah. I mean, remember that after the earnings in October, there was a pump to 230, something like that, and then bam, opened down. But now I would say the numbers look quite different from October.
I think it's more macro than Palantir related. My answer is yes, but you got to have a really exciting macro to help make that happen. And maybe we get there by the end of the year. But
the macro, the narrative, I personally think the chip trade is a bit saturated, overcrowded as of today. I think the market is craving to rotate into the new story and to, okay, you're spending all this much, but show me the value. And Palantir, as far as I know, as far as I see, is the only true place where a software delivers value. Like, think of competitors. We've been studying this company for so long, and the biggest competitor is Chap Visions.
In France.
We are not even hearing anymore about Databricks. I think it's doing well, but nobody cares.
No, Databricks is scared to go public because they just did a Series M financing. They know that if they go public and they have to be judged with a scorecard every day and deal with the manipulation and algos and short sellers, like it's not easy, you know?
I can imagine Databricks is willing to play the card of we are the Palantir killer in the same way Rivian was supposed to be the Tesla killer or that kind. But the issue is, unless you have numbers that look at least alike or can look alike Palantir, there is simply no reason to get shares of Databricks rather than just click by Palantir.
Yeah.
Well, I mentioned this a while back, actually, after the CNBC, Karp, when he mentioned about the, free cash flow in 2 years. So I remodeled the company with that in mind. And I reached a fair value of, 330, 340, that kind of range, which is, 165% from where it's currently trading. And that sounds completely insane. Like, what do you mean fair value 340? But the thing is, after people read it, I said, just read my research coverage and then rebuke it if you want, like criticize it. But first read it and then look at the number. Like, don't just, blindly say, 165% upside my bum. Like, no way. Like, no, just read it, look at the numbers and look at what Karp is saying, and then tell me if you still think it's unreasonable. I haven't heard a single person refute my article on that. Like, no one can disagree, like, after they read it. So I think, like, the company should be well past 200 here. Like, with what the company is doing, the trajectory of it, like when you start to extrapolate that, over the next 10 years, bring it back to present value, I mean, I think the stock should be trading in the 300s here. Like not joking. And I was called the biggest Palantir bear, like when we used to do the Palantir weeklies. I'm like, company looks overvalued here, and everyone called me a bear, and now I'm like called like a blind bull. Like, no, I just look at the numbers, I do my own forecasting, my own modeling, and this is what I came up with. And even though it sounds crazy, as I mentioned, when you actually look at the numbers, it doesn't look that crazy anymore. So that's all I'm saying. For people that are skeptical about where Palantir is heading, if they deserve 200, 300, just try to value it yourself. Like, just give it a go, and then get back to us if you think it's unreasonable. I don't think that you will reach that conclusion after you actually sit down and look at the numbers.
Speaking of bears, let's hear someone who used to be one of the bigger bears on Wall Street, Louis De Palma, on Palantir.
Give us sort of your take on this line of business.
Definitely. There are two closely followed metrics with Palantir. One, as you referenced, is the U.S. commercial growth acceleration. The second metric is a more forward-looking indicator. It's the total deal value of bookings with U.S. commercial, and that also accelerated to what I believe is 158% from 47% last quarter. And the reason there's such a huge focus is because of competition from Anthropic and OpenAI. I believe on the last segment you were also talking about that. But both of those frontier models, they've been rating Palantir's employees in terms of hiring forward deployed engineers. So there is intensifying competition, but Palantir has been shrugging it off, and they produced a blockbuster print.
So just to sort of boil it down, I mean, the growth in U.S. commercial in terms of total deal value, as well as just growth in revenue, that sort of, that puts to rest the narrative that Palantir, what Palantir does, could be displaced by AI. Is that correct?
I wouldn't say that it puts to rest the whole narrative from the standpoint that the frontier labs, in terms of their capabilities, they're still evolving, and we're still in the very early innings. But Palantir's argument is that their AI is very secure, and that they have the ability to use open weighted models versus closed models. And with open weighted models, organizations have control over their own IP, and they have greater control over the pricing. There's been this concept of token maxing, but Palantir believes, and many of the enterprise customers believe, that they have the best solution, both from protection of IP and also from an economic standpoint.
What are some of the questions on that?
So once again, going back to this argument, the sell side has been concerned about OpenAI and Anthropic taking their lunch, and these numbers are proving that's not happening. I think that's why the stock is now trying to hit 140 after hours. Amir, a question for you. Is customer count concerning?
No, as I mentioned, like they can put up this growth with like these few customers coming in. That means the scalability is insane. Imagine when the customer count actually starts growing, somewhat in line with the business, what kind of growth, Palantir will be having. I would be concerned if it was the other way around, like customers are exploding and the revenue is going up, because that means that, like, okay, the growth that we're seeing is just, inbound customers. There's maybe not as much scalability, to the Palantir business itself. But the fact that Palantir can scale the revenue the way they are with so few customers coming in, that's kind of bullish to me. Like, of course, I would have loved to see that, be even higher, but I don't think it's such a negative, like bearish take that some people make it out to be. Like just look at the scalability of the customers that they do have. And that gives you a sense of what it might look like in the future when they reach 2,000, 3,000, 5,000 customers in the future.
Yeah, I agree.
But I don't know what they're going to do with this 9.4 billion cash. I mean, to be honest, like, just throw it all into buybacks. Like, I don't even know at this point. Like, we have this debate every earnings.
I don't think buybacks are the move here. I think they need to invest in something that, when the growth does slow down, which is inevitable, hopefully not for the next few years, they've got something that's an anchor that's growing independent of them as a business. I don't know if that's a startup. I don't know if that's...
I mean, we talked about this in the past. So a lot of people want to see an Anduril stake. They are aligned, like their missions are aligned. They share the same values. Makes a lot of sense, right? They have a lot of ex-Palantirians going out and starting their own companies, which are, they know how good those people are. And ex-Palantirians are doing really well with their own company. So it could have been like the Palantir Ventures kind of thing. Sure. But I mean, like, we're not doing anything with this cash. Like,
well, I think we're probably collecting a 3% yield on it, which is still on 9 billion. Not bad, right? 3.5%, 4%.
Yeah, not bad. So, I mean, yeah, you have that cover as long as, treasury yields are elevated the way they are. But what happens after that? Like, I'm really curious, because they're not cash constrained for their growth. Like, they are able to grow without expending any cash. So I don't know. Is there a way to, like, burn some cash to increase the growth? I don't know. Like, it will be interesting to see. I wish they would, like, be asked that once again. They were asked that like a couple of quarters ago, what they plan on doing with the cash. I think maybe I'm misremembering, but like, there's no, like, clear. I mean, we're talking like about to be 10 billion in cash. It's not like peanuts. Like, this is a large sum of cash.
I think at this point, they just want to beat Apple. Didn't Apple had at a certain point like 100 billion, something like that?
I don't recall. Don't follow Apple. Maybe.
No, because there was a point where Apple hadn't started buybacking. Sorry?
They have 10% of Apple's cash. You're right.
No, but there was a point where Apple was just accumulating cash like hell. And it took an activist, Elkan, to join the board and to mess up, to convince Tim Cook to actually start buybacking shares, because that would have been the best way to deploy this huge amount of cash. And as far as I remember, it was like 100 billion.
I think Karp went on. I think it was the Fox interview recently, where he hinted at Palantir doing their own like AI cloud. I don't know if he meant like Neo Cloud, but the capital expenditures aren't there to like suggest anything like that. Am I imagining things, or didn't he hint at something like Palantir having their own AI cloud, like in a very recent interview? Someone in the chat, let me know if that was the case. I think it was during the Fox one, and that's also like a path forward, especially when you're talking about AI sovereignty and stuff. Like if you can offer like and facilitate like the data center stuff to ensure that your customers like are properly secured and stuff like that, and everything is hosted with Palantir, you can entrust them with everything. Like, yeah, maybe, but I mean the capex isn't there to suggest that they're building data centers. So I don't even know. But yeah, I thought that it was peculiar when he went on to Fox and hinted at that.
Yeah, I think as someone mentioned, they could be investing in some of their best customers. I mean, the point is they have a lot of optionality. The more obvious answer is invest in sales and marketing and keep the growth rates up the way they are. But that also takes a hit on their margins, right? So, I mean, again, no one can complain they're not growing fast enough, even if they have more demand than what they know what to do with it, when they just put up 93% growth. So, like, I get that annoys people, but their margins are also incredible. There was also a culture they're trying to maintain. You can't just, hire a bunch of people and pay them money and grow the business if that erodes the culture. So I think they're doing it the right way. And it's just, if they think the growth is slowing down a bit, they can then take some of that 9.2 billion, invest it back into sales. But they don't need to, because they're not growing at 20%. And I think that's the exciting part as it hits 140 here after hours.
I just noticed the presentation says 9.2 billion in cash, but the balance sheet says 9.4. So 2 billion in straight cash and cash equivalents, and then marketable securities of 7.4 billion. So it should be 9.4, but whatever, just a peculiar thing. Like it's missing.
We will survive.
Yeah. It should be more than
imagine if this is the issue we are having with the gold.
Yeah, this is the like what? the intern that did the slides missed 200 million in cash. Like what's going on? Like guys, short the stock. What the is going on?
No, as Emir said, it's really difficult to find something we don't like, apart from the usual stuff. What we know that Europe is not really taking off.
But it kind of is 25%.
I know, that's maybe not Europe. Maybe it's Asia. Yeah, I mean, it seems in Asia is going well. Still early, but it's advancing.
I don't know if you can read that. Palantir Tokyo, baby. Everyone make it out to the next Palantir event in Tokyo. Let's, I met a lot of people, I felt like Amit. People went up to me like, wait, you're Emir, right? I'm like, well, I'm the only white guy here. Like, it's not hard to make me out. Yeah, I mean, crazy things are happening in Asia. We saw the Korean event was huge. A lot of Korean investors. Korean investors haven't been doing too good lately, the rumors say. But yeah.
Dude, the Koreans are levered up heavily on Palantir. So today is going to be a good day for Kospi.
We're saving the Kospi, baby.
The Koreans are, dude, Palantir and Tesla are, I think now, this was last year's stat, Samsung and SK Hynix are probably the top 5, but Palantir and Tesla used to be top 5, and there was a quantum stock in all of South Korea. So there's definitely some leverage from the South Korean retail base on Palantir. So they needed a nice 12% move. They really needed it.
I think it's a good day to go on the merch store.
Yes, good day for that as well. MT, thank you for this comment. Hey, I'm a McCarthy employee here, starting to get access to Foundry. Can't wait to try it out. I interviewed one of the VPs of McCarthy at the last AIPCon. It's on YouTube for people to watch. McCarthy is a very exciting partnership. So excited for you, and hope you you start to see more of the value as you use Foundry. Rardolo, thank you for the super chat from one of your first followers since 2020. Appreciate you, man. It's been a very, very long journey for all three of us. And it's been a long 5 years of covering this company. But also, life is about finding something interesting and being able to explore how interesting it can become, right? Going on an adventure. And Palantir 5 years ago was something that piqued a lot of our interests, and it's been an adventure. It's been a journey to go on covering it. You've got a very exciting, dynamic leader at the helm who cares deeply about not only the people that are following the company, but cares about the impact the company is having on the world. So it's just been one of the best stories over the past 5 years. But the part that makes a story interesting is the hardships you have to go through before you get to the glory. And my goodness, were there hardships? But a 12% move after hours right here is, I think, a reflection of the market. At least for now, stocks go up and down, but at least for now, that Palantir's on the right track.
Isn't 12% exactly like what the implied move was going into earnings?
Yeah, it was about 10 to 12%. Yeah.
Kind of interesting how that plays out.
Guys, for curiosity, Apple seriously had 100 billion cash in 2012. I was at the beginning of my investment journey back then when it received the activism from Alcan, essentially, which forced Apple to start buybacking. That was also supported later by Buffett. And then you could see how over time, like the cash already in 2015 was 1/3 of that. Essentially, the stock was so low that they purchased so aggressively. And maybe that's a hedge towards a moment where the stock could be weak. If Palantir still has lots of cash, it could be a way to force the bad narratives out.
And I think it makes a lot of sense now, because they're not like, if you're buying back, a couple of $100 million of shares when the stock is 200 plus and you're diluting, 6% year over year every passing quarter, doesn't really like make a dent at all. But now that you've slowed down, dilution massively, I mean, as we mentioned
you guys missed the point. They can't buy back stock. Trump doesn't want defense contractors buying stock.
Yeah, right now, yeah. But I mean, we're talking about uses for the cash. So when the stock is like, they're not diluting it, the cash is going up a lot, there will be a lapse. I think it's severely undervalued. So I wouldn't mind as much now if they would, be able to buy back stock and use the cash that way, especially if the stock would have dropped on, earnings like this. Because as we've seen, like with Robinhood, for example, like the stock market can be very irrational towards, great results. So who knows, like they could have reported now the stock could have been down 20%. Like that could have happened. And I don't think any of us would have been that surprised, because the market is just so irrational right now. Like crazy things are happening. So it's a good way to have that possibility. And now that it actually does make a difference because they're not diluting as much.
That is fair. There could have been really good results and the stock could have been down for whatever. I mean, that's what happened last time. Last time was phenomenal. And it was down after. It popped for like 3 minutes and then it just came right back down. So granted, we were at a lower price than we were last time, so it felt a little unlikely that would happen. Also, we had a really good day in the market, but who knows if this lasts tomorrow, right? We still have a lot of months left of this year.
Yeah.
To play out.
We haven't even gotten through the call yet. Let's not celebrate too early. Like a Carp could go on the earnings call, say something to ruffle the wrong feathers, and we could be down 20% after the earnings call. Like you never know with these things. So
I don't think now it's falling 20%. Not after.
Yeah.
Not now. I mean, that was in the initial results, but this is like now that the numbers are baking in, I think the algos are like, holy shit, what did they do? What are the results? Because once again, the analysts, they've got it wrong for 2 years in a row. Like Palantir's been beating by an average of 15 to 20% every 90 days for 2 years in a row, which has been the benefit for shareholders, because every time the analysts underestimate them, they just over deliver.
Yeah, and when they revise up their revenues forecasts, they will have to adjust the price targets that they have upwards as well. Otherwise, it doesn't make any sense. Like they can't keep their 180 target and be like, yeah, by the way, we keep the target, but we expect like 2 billion more next year. Like that, no, you can't do that. Like they have to go together.
Like Emir was saying before, probably in October, analysts needed to catch up too much, too fast, because they were essentially late to the story. Now they can't escape from just raising both the estimates and the price.
Yeah. And I mean, when Palantir was trading in the 200s, just for context, like a lot of people might not have followed the story as closely, some analysts still had price targets of $28. when Palantir was 200 plus. Like, are you kidding me? Like, yeah, they really, there's really been a mismatch here, and maybe that's starting to come around now. We'll see. I mean, every single passing quarter, like, they get it wrong. I'm kind of afraid that they're gonna push the envelope too much and push like the expectations too high. But I mean, they've been beating my very high expectations like every quarter as well. So I don't even know. Like, we'll see.
But the funny thing is,
Exciting times.
even if the analysts raise the expectations, I feel like Palantir will beat those expectations. I feel like obviously the company finds out what the expectations are well in advance. And I think they're having a lot of leverage with their customers or with these new deals to get like the money they need to hit their numbers and to still provide value to the customers. It's becoming one of those things where 1,000 customers is nothing. And they're going to do the same amount of revenue as a bunch of SaaS companies put together that have hundreds of thousands. Like, it's unbelievable.
Yeah. And it's not like they can't grow their customers. Like, I've heard privately from people who are like, yeah, my company, which is pretty large, approached Palantir, and they just said that unfortunately right now they don't have the capacity to deal with us. Like, they just stolen straight up. So I mean, it's not like Palantir can't grow their customer count. They're just prioritizing. And as Amit mentioned, if expectations increase, I'm sure they have levers that they can pull to accelerate this even further, especially now that we should start to see some of the benefits of a couple of quarters or even years ago now, they started to partner up with all of these consultancies. Like, it might be time to cash in that chip soon, have them do all of these boot camps and stuff to actually accelerate the customer count. We'll see. Maybe AI FDs will unlock some crazy kind of customer capacity for Palantir as well.
Guys, the call is in 4 minutes, but also Carp apparently will be on CNBC in 4 minutes. So we'll go to Carp, and the call will be some of the financial stuff before they get into Q&A.
Yeah.
So, we'll try to keep both in line. Yes, I think they will have better mics this time. Last time there was a little bit of an issue. I think they'll be okay this time. And yeah, congrats to everybody. I know it's been a tough year for a lot of different stocks. Rocket Lab, Robinhood, Palantir. These were big winners over the past 2 years. SoFi, this year it's been tough. A lot of the momentum shifted to the semis. But, once again, Amazon, Microsoft, Google were tough for the first 5 months. And in the past 2 weeks, they've added over $1 trillion market cap. So things have changed if you bought the dip on those. I think the most important thing, and this is something that I've been thinking about a lot more, is when you're buying the dip, which all of us inevitably have to do as retail investors, we have to allocate more of our personal capital to get more of a share of these companies, and the market gives us opportunities. Are you willing to hold it for a long time? Because I've asked a lot of people, they're not willing to hold Micron for the next 5 years. They're not willing to hold some photonics name for the next 5 years. But most people can hold Palantir for the next. Most people can hold Shopify. Most people can hold Google. You can hold Amazon. And so in the midst of this AI trade, there's a lot of money to be made, but there's also a lot of peace that you need to have with yourself. And when it comes to Palantir, if you can buy it and hold it in 5 years and trust that you might not be getting the best price here or there, but you believe you're getting a price that is undervalued compared to what the company can become, and the company is giving you the trajectory of evidence to believe that they will get to that point and that their business won't fall off a cliff randomly if something happens with chip demand, then that's what you DCA into. And I think the same is happening with the Max 7, the same with the other software names. And hopefully by the end of the year, those stocks start to reflect a lot of that value that the semis have reflected. All right, we got 2 minutes. We are going to see which starts first. If we don't have Carp, then we'll get to the call. And then...
Just a random question on a philosophical level. Burry started shorting Palantir when it was higher, and it closed when it was lower. But was he actually right?
I don't think so.
I think he still has puts, by the way. He still has puts on it. Even though
does he?
He took off a lot of his short, but I believe he still has some puts. So, yeah. But, I mean, look, the timing of closing the short at 107 ended up working out. The broader problem is, that's not what he was saying. He was saying it's $50, which is why I believe he still has $50 puts for Jan 2027. He closed it for a reason. It's not like he closed it because he was like, oh, I made all this money. He closed it because he was like, all right, this thing's not going that much lower. I shouldn't test my luck here. and we're seeing that now after hours.
He would have been right if he said, I think the whole market is going to punish AI companies over the next couple of months. Then he would have been, directionally correct. But he's not correct on his own thesis from someone that read all the 10,000 words that he said that, yeah, no one actually read my report. Like, no, we did. And like, it
was painful. It was a so AI slop.
I don't know if it was AI, but I think he's wrong.
I can smell it. Look, I smell AI text far away.
Shark in the water, Arnie. Italian shark, baby. You can smell it.
Shout out to our guy, TJ. I think he's locked and loaded with 30,000 shares of this company at around 125. So
wow,
it's a fun day for him after hours. That is for sure. Okay, so earnings are not live yet. No, the video just started. Okay, so I'm going to start with the earnings. If I see Carp, we'll go to Carp, and then we'll get back to the earnings call itself.
All right.
On our relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities law, including statements regarding our third quarter and fiscal 2026 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our Q2 results are unprecedented, but entirely unsurprising, as the abrupt market shift in LLMs that we've been warning you about for years is now here. We delivered 93% year-over-year revenue growth, our highest ever. The story of this quarter is, once again, our US business. It now comprises over 81% of total revenue and grew 115% year-over-year and 23% sequentially. Our US commercial revenue growth accelerated to 149% year-over-year and 28% sequentially. And our US government revenue grew a remarkable 90% year-over-year and 18% sequentially. These top-line results are accompanied by a Rule of 40 score of 155 and $1.22 billion of adjusted free cash flow. We closed 220 deals worth $1 million or more, of which 98 deals were worth $5 million or more, and 73 deals were worth $10 million or more. Record highs across the board. These results are a clear indication of the profound value we've unlocked both for and with our customers who dared to cross the chasm with us. In contrast, enterprises that are not using Palantir are seeing their token meters spinning endlessly just to get slop without any correlation to value. This token model may be working for the labs, but it is not working for anyone else. It's breaking corporate budgets without results to justify the expense. And worse, companies are paying to give away their most important secrets, the very basis for their competitive advantage, ultimately contributing to the commoditization of their own businesses as their secrets become the training data embedded in the foundations of all future models. On our side of the chasm, what enterprises demand is AI sovereignty, owning the operational definition of the data, logic, actions, and security of their enterprise. An organization's data is its treasure. In its richness is the alpha. We are fully aligned with our customers, building a stack that enables the compounding of their alpha. Our deep alignment allows our customers' ambitions and our own to become one. As Kirkland and Ellis highlighted, quote, through our work with Palantir, we have built a new operating model for legal services, one that centralizes and compounds the expertise of our most senior lawyers. What used to take days for a lawyer to analyze, discuss, and draft now happens in minutes. This would be impossible without the ontology. We do not see this as a vendor relationship or a one-off endeavor. We think this is a revolutionary change in how our work gets done. This is what we do with our customers across industries, and the deals we are closing are a testament to the monumental shift in the AI market that's underway as we speak. In our US commercial business, we closed $2.1 billion in TCV, with a 271% year-over-year growth rate on a dollar-weighted duration basis. A multinational technology company began working with us in the fourth quarter of last year at one operating company and expanded on their success with our platform to deliver revolutionary impact across their full portfolio, converting to a 3-year, nearly $370 million deal last quarter. Customers are decisive and bold about taking the next step with Palantir. A global asset management firm started working with us in Q1, then converted last quarter to a 3-year, $35 million TCV deal spanning asset management automation and investment lifecycle intelligence across 4 verticals. After an agent camp in May, a global software and services company signed an initial $15 million 5-month deal last quarter. And a leading nonprofit health system signed a pilot at the end of 2025, and then last quarter converted to a 3-year partnership at $37 million TCV. Our US government business remains a source of extraordinary strength, with momentum across both defense and civil. We continue to take great pride in our US government work, equipping our nation with the most advanced, battle-tested AI capabilities. For Palantir, this is our calling. Our customers are making the decision to go deep with us with greater urgency and conviction than I've ever seen before, choosing AI sovereignty over dependency and compounding their alpha in a way that their competitors and adversaries will forever envy. I'll now turn it over to Sham.
Thanks, Ryan. Ryan just talked about the incredible customer momentum behind sovereign AI. I want to spend some time on the underlying product investments that positioned us for this moment. AIP succeeded because it's the best, most ergonomic environment for AI in the enterprise. It integrates mixed mammal AI teams across heterogeneous, interdependent workflows and delivers the fastest implementations that turn tokens into real economic value for our customers in complex, high-stakes environments. What makes it work is exquisite and layered. Data integration and transformation, ontology and actions, security and audit, workflows, agent SDKs, agent orchestration with telemetry and observability, evals and customer-specific benchmarks, AIP Evolve, and our latest investments in post-training, both supervised fine-tuning and reinforcement learning. Every layer builds on our foundational primitives, and every layer flows together. This infrastructure captures the rich, operational telemetry to feed the compounding loop, an automated model factory that runs inside the customer security boundary and accumulates intelligence in weights they control. Last quarter, I said tokens are the new coal and AIP is the train. Now our customers can build their own locomotives. AIP is where your sovereign AI is built, deployed, and compounded. We're excited for a new era, not one of bench maxing, but of bench making. The assumption that the frontier is actually the best performing is just not borne out in practice. Within 24 hours of bringing Nemotron Ultra into our stacks, we found 5 production tasks where a standard Nemotron Ultra model without post-training beat frontier models. This underscores that a handful of common benchmarks can be gained. That era, bench maxing, has ended. The new era is bench making. A customer-specific benchmark is not just a scorecard. It's a hill to climb. It's the normative orientation that directs your entire operational workflows and post-training pipeline. It defines what better means on your terms, for your business, with your strategy, and then everything optimizes against it continuously. And because the benchmark is yours, the trade-offs become yours too. AIP gives you the control plane to trade cost, performance, and latency against each other, and to decide where you run your weights versus theirs, workflow by workflow, continuously. Now you can have a continuous improvement cycle that compounds your alpha into your weights. AIP was built for this. We continue to see that our product is winning head to head. The others are focused on productivity. We are laser focused on turning tokens into real economic value for our customers. The reality is that the market has created far more intelligence than it has converted into value. A more powerful model does not solve this problem. The limiting factor is the rate of AIP deployment. A major Silicon Valley tech company recently ran a bake-off, a frontier lab and its deployment team against AIP and our forward deployed engineers. Remember, only Palantir has FDEs. Everyone else has sparkling sales engineers. The lab picked a ticketing automation problem and failed to deliver anything of value against it. We built agent swarms for each of our customers, proactively recommending marketing, packaging, and pricing changes to drive revenue and utilization. This work converted into a $10 million ACV contract. The lab was shown the door. Same customer, same timeline, same models. The only difference was AIP and Palantir's unique FDE tradecraft, and it was determinative. It was an incredible quarter in U.S. government, measured not just by 90% year-over-year revenue growth, but by mission impact. Maven continues to deliver for the Joint Force, from the factory floor to the foxhole. We had our first program in the Maven platform launched this past quarter, where a government program of record chose Maven as the platform that they will operate their program in, taking advantage of our open data standards, ontology, developer tooling, peering, security, and other platform primitives to go faster and deliver seamless experiences and capabilities to the department's chosen command and control platform. Maven has also continued to win as the developer and builder platform for the Joint Force, with over 25,000 builders. Uniformed service members, civilians, contractors, and companies are developing agents and applications in and on the platform at the speed of war. And for all that growth, our Department of War trailing 12-month revenue is still less than 25 basis points of the Pentagon's budget. Finally, last week we held our first American Builder Summit in DC to celebrate the Americans who stepped forward to join the American Tech Fellowship and to let them make the case that AI is creating jobs and prosperity by sharing their stories and showing what they built. We created ATF because the most transformative applications of AI that we saw were being driven by people without traditional tech backgrounds on literal front lines and factory floors. We now have over 1,000 ATF grads. One of our speakers, Jonah, who joined Tabit as a submarine parts manufacturer 13 years ago, straight onto the factory floor. He's a proud blue-collar worker who still turns wrenches for a living. And he built an AI application that took production planning from 30 to 40 days down to less than 1. AI alone cannot do that. It takes AI in the hands of the American worker, the tribal knowledge earned through success and failure on the line, the insights only they have. The models are commodities, but the American worker is not. I'll turn it over to Dave to take us through the numbers.
Thanks, Sean. We had a phenomenal second quarter, delivering our highest ever reported year-over-year revenue growth rate of 93% and our highest ever adjusted free cash flow of $1.22 billion, representing a 63% margin and 115% growth year over year. We surpassed billion-dollar milestones in GAAP net income, adjusted free cash flow, and adjusted operating income. Revenue in our U.S. business grew 115% year over year and 23% sequentially in the second quarter. Our U.S. commercial business accelerated to 149% year over year and 28% sequentially, and our U.S. government business grew 90% year over year and 18% sequentially. We closed $2.132 billion of U.S. commercial TCV bookings, representing growth of 153% year over year and 81% sequentially, nearly $800 million above our prior highest U.S. commercial bookings quarter. We are seeing the immense demand of enterprises recognizing the need for sovereign AI to retain full control of their alpha. On the back of this exceptional, continued strength in the U.S. and accelerating demand for our sovereign AI capabilities, we are raising our full-year U.S. commercial revenue guidance to an excess of $3.424 billion, representing a growth rate of at least 134%. We're also raising our full-year 2026 revenue guidance midpoint to $8.154 billion, representing 82% growth year over year, an 11-point increase over our full-year 2026 revenue guidance from last quarter, and our largest ever full-year revenue guidance raise. Turning to our global top-line results. Second quarter revenue grew 93% year over year and 19% sequentially to $1.935 billion. Second quarter U.S. revenue grew 115% year over year and 23% sequentially to $1.573 billion. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 67% year over year to $124 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 110% year over year and 22% sequentially to $945 million. We closed $2.337 billion in commercial TCV bookings in the second quarter, representing 118% growth year over year. Our AI platform continues to dominate the US market as the only real choice for operationalizing LLMs, particularly as more customers demand full ownership over the data, logic, actions, and security of their enterprise. Second quarter US commercial revenue grew 149% year over year and 28% sequentially to $764 million. We closed a record-setting $2.132 billion of US commercial TCV bookings, representing growth of 153% year over year. Over the past 12 months, we closed $5.964 billion of US commercial TCV bookings, a 117% increase from the prior 12 months, highlighting the accelerating demand for AI that creates real operational value. Total remaining deal value in our US commercial business grew 124% year over year and 27% sequentially. Our US commercial customer count grew to 653 customers, reflecting growth of 35% year over year and 6% sequentially. Second quarter international commercial revenue grew 26% year over year and 2% sequentially to $182 million. Revenue from strategic commercial contracts was approximately $400,000 for the quarter, representing 0.02% of overall revenue. We continue to expect revenue from these contracts to be less than $500,000 in each remaining quarter of this year. Shifting to our government segment, second quarter government revenue grew 79% year over year and 15% sequentially to $990 million. Second quarter US government revenue grew 90% year over year and 18% sequentially to $809 million. This growth was driven by continued execution in existing programs and new awards, reflecting growing demand for our AI platform in government. Second quarter international government revenue grew 42% year over year and 5% sequentially to $181 million. We closed $3.4 billion of TCV bookings, up 49% year over year. On a dollar-weighted duration basis, TCV bookings grew 129% year over year. Net dollar retention was 157%, an increase of 700 basis points from last quarter. We ended the second quarter with $13.1 billion in total remaining deal value, an increase of 83% year over year and 11% sequentially, and $4.9 billion in remaining performance obligations, an increase of 103% year over year and 10% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 86% for the quarter and reflects an increase in costs associated with taking on cloud hosting for one of our government customers. While this change led to higher cost of revenue in Q2, going forward, we believe it will power faster time to value, drive greater efficiency, provide greater cost certainty to the customer, and enable us to expand their future workflows. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $1.194 billion in the second quarter, representing an adjusted operating margin of 62%. Q2 adjusted expense was $741 million, up 14% sequentially and 37% year over year, primarily driven by the continued investment in our AI platform and technical hiring. As in prior years, we expect a significant ramp in expense in the third quarter due to the seasonality of new hire starts and other product and marketing initiatives. We remain committed to investing in the most elite technical talent, as well as R&D for our product pipeline and sovereign AI efforts, all while delivering on our goals of sustained GAAP profitability. Second quarter GAAP operating income was $912 million, representing a 47% margin. Second quarter GAAP net income was $1.062 billion, representing a 55% margin. Second quarter stock-based comp expense was $265 million, and equity-related employer payroll tax expense was $17 million. Second quarter GAAP earnings per share was 41 cents. second quarter adjusted earnings per share was 41 cents. Unrealized gains from our holdings in SpaceX resulted in a 3-cent tailwind to GAAP EPS and a 2-cent tailwind to adjusted EPS in the quarter. Additionally, our combined revenue growth and adjusted operating margin accelerated to 155% in the second quarter, a 10-point increase to our Rule of 40 score from the prior quarter, and our 12th consecutive quarter of an expanding Rule of 40 score. Turning to our cash flow. In the second quarter, we generated $1.216 billion in cash from operations and $1.22 billion in adjusted free cash flow, representing margins of 63%. We ended the quarter with $9.2 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2026, we expect revenue of between $2.16 and $2.164 billion, and adjusted income from operations of between $1.292 and $1.296 billion. For full year 2026, we are raising our revenue guidance to between $8.15 and $8.158 billion. We're raising our U.S. commercial revenue guidance to an excess of $3.424 billion, representing a growth rate of at least 134%. We're raising our adjusted income from operations guidance to between $4.889 and $4.897 billion. We are raising our adjusted free cash flow guidance to between $4.5 and $4.7 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Obviously, we are loving these results and loving what they mean for our customers and broadly speaking, the West. So reflections on how we got to 93% aggregate growth, just under 150% growth in U.S. commercial, and an aggregate growth of 115% in America, which is astonishing, even surpassing the already anomalous results we've posted in the past, and at a very significant scale. And the story really does begin at the beginning when we dedicated ourselves to our most important partners in the U.S. government, and we built products to deliver value for them. We delivered those value for them by looking at the world in its naked state. We did not have we did not have AI available. We had to work with NLP, so we had to develop forward deployed engineer model to extend the technology and deliver value. The nascent version of ontology was developed. Sham, Aki, others strapped Blackberries around their head and made the code work in sensitive environments. And what we learned and what was built into this company is that there are things, values, structures that are more important than purely extracting value from a client. And we rejected the way in which we were being taught in Silicon Valley to build a software company at the time. Palantir, of course, is now both infrastructure, software, FDEs, orchestration, and business know-how. So it's a completely different hybrid. But at the time, we were being told our job was to trick the clients into giving us money for something that made them attached to us, but really added no value. So essentially a parasitic model. And in the rejection of that, we fully aligned with our partners. Now, to do that, as we went through the years, we built PG, Foundry, Gaia, Maven, Ontology, AIP. Now we're taking the AIP stack and extending it for sovereign AI, which requires us to be able to orchestrate and fine-tune models to provide a completely sovereign stack to our partners. But what is the philosophical importance of that? We are offering a present that augurs to a future that we want to live in. What does that future look like? We have more rights in the PG frame. It's safer in the sovereign AI frame, which is arguably by far the most important, because all these other things are downstream from GDP growth and GDP health. And what if we transform America into the only democracy that actually grows, where production is more efficient and manufacturing actually happens? What is that frame? That frame is not you are going to buy into a future where you have no job, where adversaries win, And everybody who does win is a small, tiny group of people living in a tiny place that somehow believes because they eat vegetables and they don't support war fighters that they deserve to have the total means of production of this country. And the rest of us should just sit back and absorb the cost of that revolution, which we're paying for. How are we paying for it? In the enterprise context, people sign up for token self-pleasurings, and that at a real cost, like other forms of self-pleasuring, where you are paying for the right for them to migrate your IP, your know-how, your expertise to their model so that they can build a competitive business that doesn't require your business, your people. And why are they doing it? It's actually being done for what they believe are moral reasons. They are superior to you. They deserve to colonize your enterprise. You deserve to be colonized. And in Palantir, and it's interesting, it doesn't work as well or as efficient purely on the alpha side as having an application layer, owning your compute. Witness, we built a partnership with NVIDIA. We're expanding our application layer. We are going to enter the market and already entering it in the classified space, as Shyam alluded to, of fine-tuning models so that the models actually fine-tuned by us in our enterprise on an NVIDIA stack outperform frontier models. And you own the weights, you own the alpha, you own everything. Every single enterprise in this country is going to either look at doing this, find ways of doing it, or at least avoid the alternative of unprotected interaction with frontier models. This is very dangerous. You were warned about this in high school, and now you're learning about it in your enterprise. And in Palantir, we are at the front line. We are in the front of driving this revolution. I am driving the business to grow at a rate equal or above to what we have in U.S. commercial for the next 18 months, which is a very high goal, but it is one we can actually get to because we are fully aligned with what's right and what's good and what actually works well in an enterprise. And for the first time, people believe us. And if you didn't believe us, you can believe 149% growth in the U.S., a rule of 40 that's 155, 93% aggregate growth, and 90% growth in U.S. comm with 62, 63% free cash flow margins. People thought we wouldn't be profitable. So this is one of the more exciting times to be at Palantir. It's one of the more exciting times to participate in Palantir. And for everyone on the sidelines, you got to get off the sidelines. This is a revolution that will affect the sovereign revolution. Where you stand in it will affect your livelihood, the livelihood of the people you care, and whether America and the West win. We cannot regress to a thin philosophical model where only a small group of people who think very differently than most of us actually absorb all of the revenue and value in our business and transfer all the dangers to us. And that's what this revolution is about. And it's extremely motivating for those of us at Palantir. Thank you.
Thanks, Alex. Our first question is from Dan with Yorkville Ives. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Where's the prompt? Well, while we're waiting, you can be entertained.
Maybe we can circle back to Dan. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
I think I'm good. Thank you. Can you walk through this at the Sovereignty Bootcamp? What did you learn with talking to customers that maybe you weren't expecting? I mean, obviously, just an overwhelming sort of group of executives. Can you talk about that, Alex?
Well, first of all, for those of you not in the know, we did a sovereign boot camp after this kind of revolution exploded. And just to give the backdrop here, 2 years ago, we spent 4 or 5 months, Sasha, who runs this, organizing AIPCon. This was much more like, hey, let's invite our buddies over to lunch. And then all of a sudden, we start getting bombarded by people we invited, people we didn't invite, all levels of the business. So like when you're working in enterprise, it's really important that the operational people are interested. So it was like CEOs, operational leads. And there's a huge educational component, and Shyam talks about this a lot. Like people understand that they need a way of controlling their alpha. They understand broadly that token maxing is at their own cost, and they certainly understand that token maxing is leading to them transferring their data, their prompts, the way they run their business, their expertise to a third party. But they don't. They need education on what they can do about that with us, preferably, but also without us. How do you do contracts? How do you work with open weight models? How do you work with closed weight models? How does this work in ontology? Is ontology the protective layer that they've been told? Does it create value the way they? How would this look in their own business? And how would they work with the compute stack? And so there's just this massive demand, and we're in the business of educating people, both our customers and others. But it was a super heterodox group of people, both in terms of the kind of people showed up, the demand for it, and also people we've not worked for. By the way, one of the reasons the NDR number is so strong, ridiculously strong. I mean, people always write these things about customer adoption and maybe, but the NDR number is enormously strong. That is also going to shift and even as hard as it to believe, become even more positive, because some of our older partners we haven't really interacted with, they also showed up. They're like, oh, okay, now we get why we would need you. And not just Foundry. They're migrating across our stack. So customers that were only using Foundry now want ontology, now want to be part of the Sovereign AI stack. I would say, last not least, you're asking the external version, internally. Recruiting, retention, excitement at Palantir. I mean, I'm very excited. I think the people around this table are very excited. The legal department is excited. That hasn't happened. That doesn't happen. Like, they're out like rock on. So it's more fun, So yeah, there's just that's the way this went down. And I think this is the way beginning. So the way at least we think about this internally is, what portion of the market is available to people who want to create value, create value and keep it. That portion of the market has gone from a small portion of the market where we're doing well to like a large part of the US GDP. And that's why we need partners. Behind the scenes now, we're trying to find partners. Now, partners, we need technically exceedingly competent partners. Partners doesn't mean a vassal. We don't have to agree on every issue. We don't even have to agree on every client. They can occasionally compete against us. We've seen this in the defense tech stuff. Stack and Sham, like the approach to defense tech where we partner with people. Partner doesn't mean we agree. Sometimes we compete, but it means we're marching in a similar direction. It allows us to scale. So those things are going to be a very big, important part of like essentially the guide. Why am I pushing the company to grow, not to just the end of the year, but next year? It's because that also forces us to find ways to scale to meet the demand that's out there.
Thanks, Alex. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Hello.
So a follow-up to Dan's question. When all this AI revolution started, right, it was really clear for enterprises that data and proprietary data and how you train your models was going to be the key. But then we're like 3 years into that revolution, and now everyone started to realize, oh, owning my data and wherever I learn from my data is important. What happened there? Why you think that you position yourself back then in a different approach to AI that enterprises weren't able to see? And why these numbers that reflect that you're the winner of AI today, it wasn't that clear for any other software application back then?
Well, you can kind of divide it up into two parts. There's the first part is efficacy, and then the second part is efficiency. That's not quite the right word, but it's like, how do you scale it? In the 0 to 1 phase, it's much more important to focus on the application layer. Like, okay, this new thing has happened. How do we turn that into economic value? And then as people started to experience the economic value and as time started happening, you started to see that some of the people who were partners out there were building things that were competitive to you. And I think that took some time to kind of seep into the psyche and mindset of, wait a second, this is maybe not, now I know this thing is valuable in the right hands on the right platform, but I also am going to need to control the weights, that the alpha that is being generated isn't simply the data that's resident in my enterprise. It's also the metadata, the reasoning traces, the exhaust, the usage of this, which I don't yet have mechanisms to control. And now I understand that's actually probably more valuable than just the data in my enterprise. And that's been a clarion call, I think, for the market over the last quarter, 2 quarters.
There's also the question implicit in your question is, why did we get this right? And, again, I think we are actually fully aligned with our partners. Sometimes we make decisions like, that are against our economic interests. Like we're supporting lots of institutions in Europe. The growth sucks. I mean, clandestine institutions. But without our products, they would have rampant terrorism and their problems, their migration problems, and the results would be 10 times worse. It's not actually in our economic interest anymore to do this, but we still do it. And it's because we actually are believers, for better or worse. I would say also, this is a company that from inception, has valued artistic insights, meaning you can't model something purely on science. You have to have an aesthetic or artistic appreciation for it. And we've made huge bets. Everyone sitting at this table and many, many hundreds of people at Palantir have essentially artistic insights. We've always viewed ourselves, we've always said we're a colony of artists, and people assume that means we're just difficult. And that's also true. But, it's also, we value insights that are way before anyone else would see them. And we build major parts of our business. That's very hard for normal business to do because, one of the jokes running around Palantir is we can definitely meet our guide next year if we get paid for all the people copying us. So we got a small portion of people copy, of the funds for the copiers, we do very well. Normal businesses, again, no critique here, are built around, there was a playbook, we execute on that playbook, and we're in a non-playbook world. So executing on a playbook that worked 5-10 years ago, essentially build parasitic software and monetize it, that doesn't work now. And there's hundreds of variants of that, but that is a central advantage we have. We are a colony of believers and artists that are very motivated to drive value. And that sets us aside much more than I would have imagined 10 years ago if you'd asked the same question. And then luckily for us, this is capitalism. DSA wants to get rid of it, but until they do, you got to look at the results, because if our results, and the other thing I'll tell you that's very special for us, we are outsiders. Outsiders, like you're an outsider. You come to this country, you better have really good results. And like the same thing for Palantir. We know we need the best results because people aren't buying our product because we're swinging the golf club correctly or paying for the steak dinner. They don't even invite us to steak dinners. So that outsider status has caused huge problems, but in the first 18 years, but a lot of benefits in the next 18 years. And other people don't like being outsiders. In fact, I'm struggling with our current popularity.
Thank you. Our next question is from Gil with D.A. Davidson. Gil, please turn on your camera and then you'll receive a prompt to unmute your line.
Hey, what?
The topic of sovereignty, you focused a lot on how dangerous it is to give the keys to the labs because they could choose to compete with you. Is there another aspect of this as well, though, that if you choose a lab and you buy the orchestration and the consulting and the harnesses from them, you're beholden to their models? And if something happens, if it's not the best model anymore, if the model gets pulled, then you as a customer are stuck and you may have a mission critical system fail. And this isn't hypothetical. This happened a couple of times this year where one of the frontier models got pulled by either the government or the company. Well, if you work with Palantir, I would assume that when that happens, you can go to your customer and say, hey, if that model doesn't work, I can plug in another model for you.
No, I'll let Ryan and Sham comment here, but we're already doing that across the US government. We have a product that allows you to switch out models. Look, at the end of the day, if you are locked into a product, you're going to, that's the nature of monopoly capitalism. That's why people want the lock-in, because then they can raise the prices and reduce the quality. We're against that because we're on the side of the American worker, the American people, and its great institutions and other institutions across the West. But yes, people who are running big enterprises in this country are very sophisticated. They're aware of these risks, and they don't like people who are kind of flaunting, like setting this up so that they feel they're being made fun of or they're a sucker, basically. So there's a lot of anger here. I spend, interestingly, a fair bit of my time trying to explain to people that, some of the people involved in these things are not the caricatures they think they are, but because the business setup looks like heads I win, tails I win. And American business people don't like that. But then I don't know. There's a lot of things on the contractual front that would support that.
Yeah, I would say like that's, our whole focus is converting tokens to value. The example Sham gave, that's happening across the board in the conversations with customers. That's why they're looking to expand, to convert how they position themselves in the industry with us, in their industry. And so we're seeing like extreme alignment. It's not about being beholden to one model. It's about bringing the right models to bear for the right purposes. And our contracts, our structures are set up to do that, to support and compound their alpha in the organization.
I think, I mentioned it earlier, but you're going to see this, like we've been beholden to a small number of benchmarks that people have been designing models to, and then releasing models saying like, look how well it does on this benchmark. But the benchmark has actually almost nothing to do with your business. So how do you figure out how to make the benchmark that represents your reality, what you're trying to succeed at, what you're trying to get better at, and then see what model makes sense? And the natural consequence of doing that, even leaving aside all of your other arguments for sovereignty, is like, oh, how do I climb that hill? How do I figure out what it is that I do as a business that I feed back into weights that I can control, which presupposes an open model and sovereignty. And then you're not just going to do that where you're waiting, hey, maybe I'll switch it out when this model gets pulled, when the rug gets pulled out from underneath me. You're actually going to be leveraging the automation to do that constantly, to figure out when you have a next checkpoint that you can forward. Maybe there's a new model. I mentioned the example. I literally almost felt gaslit when within 24 hours of getting Nemotron up with no post-training, this is vanilla Nemotron Ultra, it did better than Frontier. If you just looked at the numbers, you would say, well, it's nowhere near the Frontier. That shouldn't even be possible. But of course, the benchmarks are wrong. I mean, the benchmarks are right for what the benchmark's measuring, but that's not my business. Those are not the tasks my customers had that they were trying to solve. And so then moving this to an empirical basis is, I think, is how we're going to accelerate the realization of tokens to real economic value.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Well, your support was crucial to getting us this far, and crucial to getting us to where we're going to go, which is a much, 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 much larger company. This is one of the most exciting times to be involved in the Palantir mission. We are going to help transform, especially this country, but allied countries, both in commercial and government. And this sovereign frame that we're using as our organizational principle is one that is inclusive of everybody who wants to have a better world today and tomorrow. And we invite everyone to engage with it in some form. And thank you.
Thank you. That concludes Q&A for today's call.
What a call, ladies and gentlemen. What an absolute rock star call. Dean, thank you for the super chat. Congrats, Amit, boys, Amir, Arnie, Matt, Steve. We've been in from the beginning. I think we'll be here for another 5 years. Well, that last sentence from Karp makes me think we are going to be here for a long time, as he has expectations for this company to be much larger in the future, up 12%. I'll start with my takeaways from the call, then we'll get to Arnie and Amir. My takeaway was, once again, they are doubling down on this narrative that the Frontier Labs are full of shit. As in, their models are valuable, but what they are trying to do with those models, aka steal your IP, the very customers they're working with, creates such a adverse and antithetical relationship to what should be happening in enterprise software. And Palantir is just calling it out. And quite frankly, they're the only company calling it out. What other software company is actually going toe-to-toe with Dario and Altman and saying, those guys don't care about you? I don't think there's any other software CEO that has actually come out and said, the Frontier Labs do not have your interest in mind. We do. We're not saying their technology is not important, but that is not the technology that is going to make your nurses more efficient or make sure that your operating margins as an automotive company so that people can keep their jobs continue to be sustained at a higher level. Like Palantir is taking a very clear stance right here. The numbers are showing that stance. Karp made it kind of obvious that these numbers are only going to get juicier and juicier towards the end of the year. And as a result of that, I think it's up to the street to figure out how much they want to value a company like Palantir compared to Anthropic or OpenAI. Those companies aren't public yet, so once they do go public, I think the street will have a lot more comparables. But I mean, this is not a company that is slowing down on the execution of AI. If AI really is a revolution and we need all this hardware, all this infrastructure, all these models to keep getting better and better, you're going to need a foundational layer. And I think this call, once again, just proved that Palantir is that foundational layer. And that's why they're winning.
Yeah, I think one thing that we've been seeing lately is distillation between, all of these AI frontier labs. Even Anthropic, has been caught doing distillation. Of course, Kimi K3 came out like a distilled model from China. Obviously, the value is not there, but I haven't really thought about this before. But he said that they are, together with the whole NVIDIA initiative, they're launching a business of, fine-tuning AI models. And he mentioned, they mentioned several times that these models are outperforming frontier models. And if you think about it, they alluded to it towards the end of the call as well, where they say that, benchmarks for LLMs are kind of useless because they don't pertain specifically to businesses and the issues that businesses are facing. It doesn't really pertain to the value that you're providing. It's like having a guy with 180 IQ who can do like internal math calculations, but he works as a sous chef in the kitchen. Like that won't really help you. But the one thing that Palantir has that really, moves the needle in terms of, fine tuning is that they have the ontology. That is unparalleled understanding of your business that no one else in the market can really match. Only Palantir can do this. So when I heard that and thought about it some more, I'm like, oh my God, this makes perfect sense that Palantir is in the business of fine-tuning AI models specifically for businesses, because LLMs are a commodity. Fine-tuning them is not a commodity. Like you can't distill, specific business expertise specifically for your own business. And with the ontology, like Palantir is the only one that can really do this. So just hearing that was really, really bullish. And I think once analysts wrap their heads around that, I think they will assign a lot of value to that. I know I am. Like the more I think about it, the more sense it makes. So that one was really, really big for me. Another one, did you guys know that they had a holding in SpaceX? I had no idea. And of course, another analyst joined the earnings call. It's kind of sick. I saw Gil with Steve Eisman. He had.
You're happy now?
Went on with the Denice, so.
Yeah,
I'm
so
so happy.
Be happy. You finally got your third
I've
analyst.
been begging for years. I'm so happy. Like, let's get on a bunch more people now. Like,
wait, how much is their SpaceX worth?
I didn't pay attention. I just heard SpaceX and that they had a holding in SpaceX as it went public. So they recorded some kind of gain once SpaceX went public. I didn't hear the details. I was like, wait, what?
Oh,
Maybe
they said that on the call itself? I missed that.
Yeah. On the call.
Okay. I was like kind of not sleeping, but hearing passively, and then I heard that sentence. Like, wait.
Yeah, when they go through the numbers, you don't really like pay attention to every number, in the beginning of the call. And they heard SpaceX and recognized a gain with them. I was like, wait, what?
People are saying it was a 3-cent tailwind to EPS. So we'll try to confirm that. That's a lot. If it was 3 cents out of EPS. Arnie, your thoughts on the call itself?
Previously, you said something that was very meaningful. You said Palantir, Carp are the only one calling out the bullshit from all the AI models. But I would say they are the only ones in the position to show who is lying.
Yeah.
In order to be in the position of criticizing the companies that on paper are the most valuable software companies now, because Anthropic, OpenAI, they're already much bigger than Palantir. Yet this tiny company, not too tiny, but in comparison, is calling out them for essentially lying to their customers, because at the end of the day, their incentives are not aligned to the value creation. They're just incentivized to burn more tokens. Does it really matter what you do with tokens? No, just burn. So I think that's a hint that we're talking with a company that is an order of magnitude stronger than the models, is just early. And the sentence that Sham said at the end, underscoring how an open model with the partnership with NVIDIA. So you take an open model from NVIDIA and then you tailor that model to your enterprise, making better results than any frontier lab. That's astonishing. It's cheaper and more effective. It's like you have a dress that is perfectly suited for you, that doesn't waste textile, that doesn't waste fabric. How valuable is that? And that stuff can be replicated almost to all the clients, and that line of business alone could become truly massive.
Agreed. Farzad, thank you for the super chat. As intelligence commoditizes, cost and speed become the most important variable. As long as you can deliver relevant intelligence, you can only deliver relevant intelligence if you access detailed proprietary data. Palantir feels insanely well positioned. And that goes to the point of the fine-tuning. Effectively, fine-tuning of the models means if Palantir works with XYZ company, they work with that company, given everything Amir said about having a foundational understanding of their business via the ontology, to make the model, which doesn't get shown in the benchmarks with all the other different foundation models, but gets shown in the benchmarks of the company's KPIs, to be effective. And I 1000% believe when Sham says those are the benchmarks we need to care about, not Grok versus GPT versus Claude. Like, that's just AI intellectuals arguing about which models are better. That has nothing to do with being on the front lines in a company. Like, it makes so much sense. And Palantir is the one. And we're not just saying it to saying it. The results are showing that they're in those companies on the front lines, making it make sense. And, you know, Sham has framed AI as a blue collar revolution. In the context of, hey, people that, you know, Dario has painted it as AI will take your job. Sham has painted it and said, no, AI will actually help you do your job, which will create more demand, grow the economy, grow GDP, which means we'll have more jobs. Like, it's just a more optimistic frame on what's happening. You're seeing it in the numbers. It's not some doomsday scenario. And I think, you know, from that angle, they are insanely well positioned to capitalize on this moment. It is not crazy to say they're going to hit 100, 110, 120% growth over the coming years. And when they do that, as Karp said, it's capitalism when you put up the results. And I liked at the end where he also said, we're outsiders. We have to have good results. You know, this is not a company that wines and dines like all the other SaaS companies. So they have, and their multiple, quite frankly, continues to reflect the expectation that they put up those results. So they know they have to deliver. Karp is not just walking around doing whatever and coming up with shitty results. Like, they're executing every single day for every 90 days in the quarter. They're bringing the results. And then the market's going to decide what that's worth. But you cannot say it's Palantir's fault for not executing. And, you know, that's the good part about like being long-term here. You really are seeing the execution start to come to fruition.
The fun stuff about all this narrative about benchmarking models is that clients are all still, like clients, VCs, all these people are still so focused into self-pleasuring with the metrics. But at the end of the day, what really matters is how much value do you unlock with your business. And you can't really benchmark that unless you see the results from the clients and how that is reflected in their willingness to expand the relationship with Palantir. There was a line, something like, stop benchmarking maxing, let's bench making. So let's make your own benchmark and you can measure your own results with the models according with the value you unlock. It's not a model just because it has 1 second less that is better. Like, how much value can you bring to your business? Have you noticed something Karp said about, I'm willing to take the company in 18 months to the growth that the US commercial is having right now? Didn't he say something like that?
Basically getting the 120, 130% growth on commercial to be the top line for the company, effectively.
Yes, in the next 18 months. Essentially reiterating what he mentioned in the CNBC interview.
Yeah, and that will have to happen to reach those CNBC numbers. But, you know, the more you think about it, like, this was on the cards for quite a while. You know, they've been criticizing token maxing for, you know, the whole year. Like, they've been saying that, yeah, you're just paying for all of these tokens, you're getting no value. And it makes a lot of sense that you criticize that when you actually have a solution for it. Now, they just recently, now I remember, you know, the folks in Interior, I thought they were doing like some kind of cloud. But now I remember it was actually fine-tuning AI models. He mentioned that during the Fox interview. That makes a lot of sense because they can actually directly address the issue that these companies are facing, and that's why they're being criticizing token maxing, because they actually do have a solution for that. So yeah, it's all coming around and making sense now. All the puzzle pieces of the puzzle are falling in place now.
Someone said, does this ER signal they're on track for 15 billion in free cash flow 2028? Amir, what do you think?
Yeah, it does. With this trajectory, well, it's only one quarter. We're talking 10 quarters until 2028. So, but yeah, I mean, they posted something in line with what they need to do to reach those kind of numbers, which, as I mentioned, would result in, I don't have it in front of me, but a lot more in revenue. Like we're talking a lot of revenue. Yeah.
There's the Carp interview I sent you in the chat. If you
Okay, it's a full 15 minutes. There we go. Carp on CNBC just now.
And by Palantir CEO Alex Karp. Alex, thank you for your time. Great to be here at your DC office.
Happy to be here. Happy to have you.
1 month ago, you launched a viral debate around the open source versus closed source AI model. What's best for a company?
By the way, that's not the revolution that we launched. That is a part of the revolution.
Since you came on.
So no, that's not the revolution. The revolution we launched was sovereign AI, and the open weight is a component of that. But the sovereign AI revolution really is about you create value, you keep the value, and we don't care what tools you use. So of course we are a large supporter, one of the earliest supporters of this letter that was organized by our partner Jensen Huang, and that's a very, very important part of this, so that enterprises can control the weights of their model. But at the end of the day, what we care about is from beginning to end, our partners get to control the value, their alpha, meaning what they create stays with them, what has made their business, their expertise of their business. So you can think of this as pure intelligence and expertise. Expertise meaning this is how you create value in an enterprise. That has to stay with the enterprise, whether it's on the battlefield or commercially. And that revolution, which I think really was launched together, has changed how American enterprise views the landscape. And again, what every enterprise we interact with, and that includes some of the biggest and most important government enterprises in the world, is saying, why would we token max, pay people for something that's not useful, and then not control the means that allow us to advance our business while keeping the value of the business inside? And you see the results, partly because we were the first business to actually capture value at scale for ourselves and then transfer it to our partners. We grew our business 93%, 9-3.
Better than what analysts were expecting.
Okay, that's not, no,
Consensus.
Great, forget consensus. No business, to my knowledge, no business at our scale has even grown half this much. We grew 85% last quarter, or like, that was crazy. 93% is like a revolution. So by the way, and then you would say, is the revolution growing in a way that's profitable? Our adjusted free cash flow margins are at 63%. Our rule of 40 is 155. The US business, the business that really counts, we are at massive scale. We grew 115%, 115%. The first thing that any normal person does is spit out their dentures. And after they spit out their dentures, they turn the numbers to see if these numbers are even possible. And then then the question is, can this business grow at this rate? Can the business grow at a greater than 100% for the next 18 months? And what you see in both the sovereign demand for our product, the product offering, our alliances, both compute all the way up, including helping to open up the world to being receptive to open weight models and their fine tuning, beginning to fine tune these models so the models work at Frontier, is a business unlike any other business that is poised to grow with these margins and with this revenue growth for another 18 months.
So the response has been very positive since 4 weeks ago when you talked about the AI and sovereignty debate. Customers have been responding positively.
No, okay, that you're using a frame of analysts are happy, customers. This is a revolution. Okay. This is not happy. Is when you come home and have a nice conversation with your partner. This is much more like you come home and your house is a castle and you're flying through the air in your car. Like, this is a revolution. This is not moderate improvement, moderate happiness. Analysts are pleasantly surprised. Eyebrows get raised. This is a completely different world. And by the way, again, I don't want to over-numerify this because Like in a weird way, it's not just the numbers, but the importance of the numbers. It's not just 93. It's not just 115. It's not, we grew US commercial at 149, almost 150%, 150%. Okay. But what's important about those numbers is you can see in the numbers, because of the charisma and truth of the sovereign AI riff and its importance that we helped launch together, that these things are going to go on for a long time. And why is this important?
Yeah.
We have people trying to drug addict us to a future they believe they control. Now, I've spent a lot of time with Dario and the EA crew. They want to tell you we have to march into a future where we own nothing, where our businesses aren't profitable, where none of us have jobs, and where our adversaries win. And Palantir and our allies are guiding into a future where you have growth and jobs. The margins are a metaphor for everyone earns.
You've blamed the frontier labs of overcharging customers, right? The OpenAI has responded. They brought down their token cost in the latest model. But why are you deepening your threat against the big labs? In this investor letter, you say we have always declined and will continue to decline, entering into a parasitic relationship with our partners.
Okay, but you're taking two things: charging for a price, which Palantir, we get paid a lot of money. Why do we get paid a lot of money? Because we create value for the customer first, and value that they keep. So my central, obvious, it's not even an attack. All I did is put out facts. There's been no response to these facts. And primarily, I was talking about a philosophy that is downstream from the belief that because they will own the future, they can take your alpha and transfer it to them in the present. I actually truly believe if a lab or Palantir or an open weight model or people deploying an open model create $1 billion in value, they should make $300 million. That's a fair thing. It's not about what you charge, just what you charge for. If you're charging for something that creates very little value, and simultaneously, if I charged you $1 million for something and you're like, oh, what value am I getting? What if I charged you $1 million and you found out I migrated your whole bank account into my bank account at the same time?
And CEOs understand that. They acknowledge those comments you made today, 4 weeks ago when you came on CNBC. But what do you say to the small business that says we don't have the budget to be able to have an open weight plus a closed source model? We got to just go with the frontier lab.
Well, I think actually what's going to happen more, I think actually that's the inverse. I think the smaller businesses are going to move to open weight models because they can't afford it. And also they are very worried about their IP. I think the reality of what's going to happen with our business partners, which are medium to large businesses whose fate most jobs in America upon which rest. So your economic future and our ability to defend ourselves rests on the back of our partners. And our partners are going to move for an application layer because open weight or closed weight, they're not putting those models on top of their enterprise. First of all, they don't create a lot of value. Second of all, the value they create gets migrated to someone else. And they're all running around saying no ontology, no love, which is like a saying from the 70s I had to look up. But it's like that's what they're saying. And they're going around saying, and by the way, we're educating people that aren't even our partners. Like, not everybody we educate is going to become our partner, but I'll tell you what, they're not going to fall for this trick if I give away the means of my production and pay for it. At least they should pay you. You know, it'd be a very different thing if they're like, hey, look, we'll pay. If I came to you, I'm like, look, I'll pay you $1 million. Yeah, your business is going to be worthless after I'm done, but at least I gave you some money.
What if you equity or something?
Yeah, or something. You know, so any case, but by the way, I've spent a lot of time with Dario. He's not the caricature people think. They have a philosophy. That philosophy is a very important philosophy, the determinative philosophy in the tech scene of the last couple of years. And that philosophy in its business practice basically says, in simple terms, I own the future, therefore you should migrate the value of your business to me and be happy with the derivative of that you sometimes get after a wealth tax. And most Americans are saying, I already have a religion. And I'd rather stick with my religion than embrace yours because my religion makes me better, wealthier, more spiritual, and many other things. This other religion actually is a way of explaining to themselves. Like, you have to remember, you're sitting at a large model company and you're a highly ethical person. How do you explain to yourself why it's your right to migrate the value of your business to their business and therefore take the jobs and prosperity of those people away from them? You do it because You believe you're creating a better tomorrow. Just unfortunately, that tomorrow is not going to be as good for the people that you are partnering with and they're paying you.
So then if we see the industry move towards open weight models, the frontier labs, sovereign. If the frontier labs then get commoditized, what happens to their valuation? Do they get cut in? What do you think that is a necessary valuation for Anthropic, OpenAI?
I'm totally, that is irrelevant to me.
What happens to the frontier labs?
Sorry. You know, I talked to Sorkin about this, and I'm just going to say the same thing. You guys are very worried about what happens to their valuation. I'm worried about what happens to American enterprises that power most of the economy, most of the jobs, what happens to the Department of War, and the safety and veracity of our physical and economic life. Every company in the world every company in America should be downstream of that. I have no professional or interest in discussing what, like, by the way, and then also, I would say in a slightly more acerbic way, why are we so focused on how well a small group of people do in America? Why don't we focus on how Americans are doing? And I'll tell you what's good for Americans. They get to control the value of the enterprise. By the way, it's also very good for Palantir. Witness 93% growth, 115% growth in America, rule of 40 at 155, and an ascendancy that looks like this is going to go on for at least another 18 months.
Speaking of Americans, both OpenAI and Anthropic have disclosed over the last 2 weeks hacking incidents. Should Americans be worried about how safe their data is?
Look, part of the problem that the model companies have is they've told you, this is dangerous, this may screw you, you probably won't have a job, and maybe our adversaries win because we can't work with the Department of War. Okay, so just go based on what they're saying. But again, there is a way this works out for all of us. So you can't, the part of the problem the Valley has is we've been super Pollyannish of like, this is all going to work out, it's all going to work out unless you're screwed. You're probably screwed, but then it'll work out for us. The reality is there's the hybrid application layer. That's the frontier closed model narrative. The application layer thing is you're going to use the model that works for you. You're going to use it under any circumstance. You're going to have compute that you control. You're going to power that model, and those models are going to be at or better than frontier labs. Now, of course, that's disproportionately good for Palantir, like most things that are good for the world.
Do you agree with U.S. companies using the more cost-effective Chinese open source models that are becoming more popular?
We strongly encourage the use of American open weight models. We're not in the business of telling our customers what they do. But I would say the reason why I signed that letter is if it's very similar to like what happens in Europe with the Green Party. If you say, I'm only going to coalesce with these two parties, you just are empowering a party that is pro-migration, independent of the insanity of it. We need competition. If we're going to keep model companies honest, which is the same thing as like enterprise software. Like I compete, Palantir competes in every jurisdiction, right? We don't want to do what Europe did. What did Europe do? Europe's basically saying you can only buy technology from Europe. How has that worked out for Europe? We don't want that in America. The way we win in America is we compete, and our open models are going to have to become as good as Chinese open models. By the way, it's also somewhat of an irrelevant debate because in reality, what I believe, what our customers believe is the models are only valuable where they have FDs and application layer and some expertise in the installation of that and protecting tribal knowledge. They're not as valuable as people may sometimes think.
The Chinese models.
Any models. Okay. Like this is like half the problem with the lab narrative is it's just not even true. Those models are used effectively in enterprise where they have an application layer.
Is it fair that they use distillation to copy Anthropic's fable?
Okay, this is the thing. There's a lot of unfair. Okay, yeah, great. We can all be Pollyannish like we live in a village in the 1500s. How do you think the models got their value? They distilled all the value of IP everywhere, including enterprise everywhere. Like we're in a battle here. Those things have to work. There's only one way for them to work ethically, and that's called an application layer on the back of your own compute where you control the model. There's a way to get it. It's not the only way, but the best way to do it is you buy Palantir, you install it, you have us do it. That way works ethically. It's better for the whole country, and it's certainly better for our customers. And that's what you see in our bombastic and astounding, impossible to understand numbers.
And it shows in the numbers, as you just shared. What's the run rate? What does the future look like for this specific business?
Well, I think one of the things that people are going to look at these numbers and they're going to say they grew the U.S. at 115%. Why can't they do that next year? And that's the answer to a lot of questions. In any case, I think this is a great interview.
Thank you for your time, Alex. This was really eye-opening and helpful to understand just the growth opportunity for Palantir. And again, where you stand on this broader AI sovereignty topic, which has been getting a lot of momentum.
and temperate in our critiques.
Did your phone blow up after you came on Squawk Box?
Oh, my phone's been blowing up since the minute I left. The minute I left, it has not stopped, and it every day. There's honestly also okay. I'll tell you another thing we're doing at Palantir.
Okay.
We're trying to figure out a.
No! CNBC just took down the video. That was quite the interview, folks. We got Neil here stepping in to say hi. Look, with Karp, if you're gonna ask him questions, you've got to be able, and it's not just Karp, it's Jensen, it's Elon, it's when you're talking to these types of people, you know, especially if you're from the legacy media, your questions have to have premises in them, and they have to be asked in a way that open the conversation up for that person to engage. And I think some of her questions had some premises, like when she said, "Isn't it unfair that they're distilling?" He's like, these models like completely stole everything from the internet. What are we talking about when it's fairness, right? So that's why I think he was as animated as responding to some of this stuff. But Arnie, Amir, anything you got from this interview?
No, I just want to say, of course, the interview was what it was. As Karp said in the end, great interview, bro. No, but I get it. Look, it's CNBC. The way they see it is that, okay, we have this guy at the forefront of AI. AI is really hype. Let's ask him about OpenAI and Anthropic, because that's hype right now in AI. Like she doesn't grasp that, as you mentioned, like she's talking to Alex Karp here, and that's why like it really looks painful to listen to, because she really doesn't get it. She's just like, okay, I'm gonna do my job. I have the head of AI revolution here, whatever that is. I'm gonna ask him about AI and whatever headlines that have been in AI. But she doesn't know that Karp, as he said, like he's like, dude, I don't care. Palantir does not care. Like, we care about our customers and our customers' need. Well, why are you asking me about what's going to happen to OpenAI and Anthropic's valuation? Like, do you think we care? So that's why it read like really painful. But I think like it's just, as you mentioned, it's just like media trying to hype up the whole AI thing and talk about recent headlines. But that's not like, she didn't factor in that she's talking to actually Alex Karp here. So well, that's why it was so painful.
The best part of the interview is when she said, "What happens to the valuations of these companies?" And he was like, "I don't give a fuck about their valuations." Like, that was such a good moment, because he was like, "Wait a second, I care about American companies. I don't give a shit about Anthropic's $1 trillion valuation." And that's the right answer. Who gives a shit about that?
Dude, I died. I was like, dude, what's going on here?
I liked when she said, "This looks like an attack. Why are you attacking them?" I'm not attacking. It's just facts.
It's just facts. Yeah. Yeah. I think he took an opportunity to really explain why, why their narrative around this open source revolution. Even when she said, if companies switch to open source, and he corrected her, he was like, sovereign. It's not open source. And I think that is a very diligent and purposeful framing by Palantir. Like, this isn't just open source. This is sovereign. This is you control your destiny. The models might be open source, but the implementation of that, which Karp also mentioned, the reason they can't be copied is because you need FDEs, you need the culture, you need the application, you need all of that in one spot. I think if it's not now, the street's going to figure out over the coming months, like, he's right. And the numbers are backing him up, which means the value should accrue to Palantir. Neil, you saw the numbers. Your thoughts on this quarter?
First of all, I'm here to say hello to Arnie. It's been way too long since I've seen and spoken to him. But I'm happy we speak when Palantir is crushing it. I mean, it's been... I have to say, I bought more shares before they reported earnings, and that's thanks to research.typefcapital.com, aka Emir, because he said they were going to blow it out of the water, and they did. And then he added that they expect to grow like this, or maybe exceed this growth for the next 18 months, which, okay, we've heard him talk about his $15 to $18 billion in free cash flow by 2028. So I guess the numbers are starting to back that claim up, which is, again, incredible to see. Other than maybe NVIDIA's growth, I don't think we've seen anything like it. Like when NVIDIA started to grow 60, 70, 80% on top of like $80 billion or so. Even now, a company like Palantir was absolutely crushing it. And again, it will continue to be controversial just because the CEO likes to speak his mind and bang the table with a pen and sometimes only be with a white t-shirt or whatever. But they are, as he says, creating value instead of extortion. So,
yeah, I think also Karp in the interview said, you know, making sense of these bombastic numbers is hard to do. So Karp's also, you know, reinforcing that these are the single greatest numbers you've seen in SaaS. It just is. And if it stays at this level, then it will continue to be some of the best results we've ever seen. The market at some point, you know, it's a beautiful thing about capitalism. The market allocates capital where the value is going to. And I don't know, man, we hit 107 a month ago. I don't think, unless there's a big macro drawdown, we get back to that range. I don't know if we stay in the 140s, but there should be a floor that's being built on this stock. And, you know, it's been stuck in the 120s all year. Hopefully that is a baseline that allows us to move further from up, because these results are only going to get better and better. And now the market knows that.
I just want to another takeaway from that interview, because Karp said some pretty interesting stuff. You know, I think she tried to like goad him into saying that, well, you are claiming that tokens are too expensive, so why are you getting into this business? He's like, no, charging for something that does not create value, that's what I'm against. Like, I already charge customers a lot of money because I create value. And then we finally got the number on like what he believes is fair. He said we should get about 30% of the value that is created. So if you create 100 million, you should be paying us 30 million. And that is infinitely scalable. And that's the thing that we've been talking about for Palantir for years. Like, well, if you create 10 billion in value, why should you not be paid 3 billion? 3 billion for a software contract sounds crazy until you factor in that that's all like from value created. Like, it's not expensive, because that's value that they wouldn't have without Palantir. So that really goes to show about the scalability that Palantir can have into the future. As they unlock more value, they start to get paid more. We saw that with the top 20 customers that they said during the earnings call. Like, those customers are already paying Palantir 127 million annually, and they're growing like 60%. Like, it's 66%. It's crazy. Like, the top 20 customers, so that's 2% of all of Palantir's customer, make up 40% of the revenue. 2% of customers, 40% of revenue, and they are growing faster than the average small client. Like, they're already paying over 100 million a year. They're still growing 66%. Like, they are happy to be paying Palantir all of this money and increasingly do so. So yeah, I think that part was like really big in terms of the scalability that Palantir can have in the future.
Mm-hmm. Can I say something? This 300 million out of 1 billion of value makes me so happy for two reasons. First, when we had no idea what was going on Palantir, we were hitting exactly on these assumptions. We were seeing a lot of customers showing we are delivering so much value here, there, in whatever industry, and we were willing like, okay, how does that translate into revenue? And we were guessing exactly, okay, a fair amount would be at 200, 300 million out of $1 billion value. And now we have the confirmation of this. After years, we have a confirmation. So this makes me happy. And the second thing that makes me so happy is that this idea relates so much with what Sham said. What's the percentage of people of extracting value with all this? We are like, essentially, Palantir as of today has a complete monopoly into unlocking value with AI.
Well, that's the other thing. You know, someone asked me the other day, if you could only own one stock for the rest of your life, what would it be? And I instantly said Palantir. And I think a couple of you guys in the chat, maybe Arnie and Amir, would agree. Maybe Neil as well. Maybe we'll get Neil to agree. But part of the reason is not because they're TAM, not because they're growth, not because of Karp, even though that's a big part of it, but it's because I know their incentives are aligned, as long as they are a public company, to only get paid as a derivative of the value they create. I mean, it's been 5 years of Karp articulating why steak dinners and PowerPoints aren't the answer. And before it was just like, okay, he's talking about this, but now we're seeing in the results that are better than every other software company. It's not the steak dinners or the PowerPoints. It's legitimately, we can only get paid from 1,000 customers, which is nothing in enterprise SaaS, 1.8 billion and 1.9 billion in 90 days because of the value. And so as long as you believe they will stick to that over the long term, that value should compound. And if it does, and they have, a $1 trillion TAM to go after, then, they should be on their way to becoming a multi-trillion-dollar company one day.
And why shouldn't that customer count double? Because if the customers are seeing other customers get a 1 billion in value, 10 billions in value, like why wouldn't they then join us? Actually, here, let's do the same. Like my competitor is getting so much value, why shouldn't I see it? And they'll continue to grow. And I think this is the biggest threat to legacy software companies that have been, let's say, scamming their customers by saying, oh, you need this. And then 1 year later, you need that extra addition. You need this and you need that, but they never actually solved any problems. Palantir is here and it works because their product was, first of all, the product works. Second of all, they're extremely profitable, right? Because it would not have worked if you're burning money and you need to find ways to make money. Like this works across the board, and you are becoming the biggest threat to companies that don't create values for customers, that just charge them every year, which charge them more. Like the sales team, your only job is to upsell. Why should I upsell if I'm solving a problem? Right? Software as a solution, but there is no solution, since every single year you're trying to sell me more and more of those solutions which don't solve any problem. And now you have a company that's coming here and say, actually here, this is the solution. Just see how much value we create and we unlock. We'll take a % of that, and I think everybody's going to be happy. And that's unique.
It's like Palantir doesn't need to have a huge sales force, because all the world is essentially selling Palantir. All the software companies trying to sell stuff that don't work, essentially they make Palantir more valuable because people see Palantir and lacking value. All these AI models charging for tokens, and then clients getting frustrated. Intrinsically, they're selling Palantir because clients are frustrated. So when they hear, oh, I unlocked so much value by deploying open models with a controlled way, unlocking value, that's a sales for Palantir intrinsically. So the biggest trend that we could see now is all this frustration coming from clients not being able to see the same economics Palantir is having, actually converging to Palantir.
Agreed, man. It's been an incredible journey. It's been absolutely wild to see the company grow into the company that they have become. Thank you to everyone who's stuck around for the past 5 years. If you joined a few months ago, a year ago, 2 years ago, I mean, this company has just started, I think, in its journey of really going after being the AI leader. These early results are pretty promising, but years ago, all the foundational elements of this day happening were there, and now it's starting to come into fruition. But even now, it still feels incredibly early for the size. Again, 1,000 customers, for the size of opportunity that they have. It should be pretty massive. So 14% after hours. Hopefully this holds. I know the stock has been a tough hold this entire year, but nonetheless, you are investing in something real, not something fake, something sustainable. Doesn't mean the results are always going to reflect in the price going up, but it does mean that you are investing in a company, that deeply, deeply cares about creating value, and seems like that value is being created. All right. Thank you, everybody. Deeply appreciate it. Amir, Arnie, Neil, thank you all for joining. Their links will be in the description. You can follow them there. And we'll be back in another 90 days for Palantir's Q3 2026 earnings.
Cheers from the brothers.
Thank you, everybody. See you tomorrow.
Ciao,
Bye, everyone.
ciao.